Beautiful, beautiful, beautiful. All right, let's go. Let's go. We got tuning in from Canada, Turkey, Jamaica, Chicago, South Africa, Lebanon, Kenya, Poland, Qatar, Italy, Bangladesh. Just recorded the meeting, Peter. Thank you. Slovakia, Hollywood, California, London, Chicago, Serbia, Saudi Arabia, Nigeria, Texas, Romania, Tanzania, more Kenya, Virginia's, Chicago, Nigeria, London, Istanbul, Turkey, Canada, Singapore, Merry Christmas, Malaysia, Portugal, Mississippi, Jamaica. I got 50 more messages to go through. London, UK, Chicago, Philly, South Carolina, New Hampshire, Italy, more Chicago, Atlanta, Philippines, UK, Italy. Stick around, guys. We're going to get into some good information. Somalia. Let's go, let's go, let's go. Cool. So welcome, guys. I appreciate you. We are maxed out at 100. So I guess next week we're going to have to update the Zoom call so we could run it up to 150, 200. Last week we had 70. So super excited for this Sunday market overview. I hope you guys got some value from last week's overview. And, also the midweek and the post-week overviews that I uploaded on YouTube just after that as well. So appreciate you guys. I have a little outline for today too. So make sure you got your notes ready. We're not just going to dive right into the charts. I really want to give some value to start off to give you guys a background as to what's going to go on this week. And then we are definitely going to go over a lot more pairs than last week, because something that I'm realizing as we just hit 2,000 people in the free Telegram trading group is that, again, I only choose a certain number of pairs to go ahead and trade, but that doesn't mean that you guys can't go be looking at other pairs as well. So as long as we together can, go over analysis for those pairs, then you could take those setups, you could send them to me and we can go at it like that. So I'm going to go ahead and take the chat out. I'm going to push this back down here and we are going to get into the outline. So number one, just welcome to everybody. Number two, we're going to go over fundamentals as always, talk a little bit about Brexit, talk a little bit about cryptocurrency, what's going on with crypto, talk a little bit about the dollar and the stimulus package that is or is not getting passed throughout the US at the moment. And then we are going to go into the charts. We are going to do some Q&A, and make sure you stick to the end if you can, because I am going to go over some key mentorship stuff for these upcoming weeks and whatnot, because I know I get a lot of questions on that still. So we will be getting into all of that. Perfect. All right, guys. So we're going to dive into fundamentals. Before we look at any technicals, you guys already know that we need to go over kind of that background noise, what they're kind of doing as the excuse to move the markets on the technical side. So then now, as long as we understand what they're talking about over here, we can go ahead and apply that to the charts and wait for them to hit those big spots, those big movements inside of the market. So the first thing I want to touch on here is some holiday trading hours in Forex Factory. Now, you guys, on Sunday, if it isn't a habit that you already look at Forex Factory every single day, even just to start out the week, then you need to make that a habit. And there's plenty of other economic calendars out there that you can look at too. But for the most part, again, Forex Factory is what I do my due diligence on. And I just want to reiterate this. I feel like the reason that people tune into me, whether it's like my finance channel or other financial channels, is because I like diving into this information. I like reading about the fundamentals here. And maybe you guys don't. Maybe you don't have the time to go read about the fundamentals. So you're able to come to stuff like this where I could properly explain it to you guys, source my information, so then you don't have to go do the hours and hours of studying. You can just listen to me talk about it for a couple minutes. So first, we're going to go into Forex Factory. I'm going to minimize myself, move it on over here. And as you look at Forex Factory this week, right, there is not a whole lot going on. They don't have any major news. There might be some yellow folders hiding out in here. Let me go ahead and just see what they got going on, right? Just some really low impact news. But this doesn't mean that there's not going to be things going on, right? There's always something going on, even if it's not on Forex Factory. So again, we're rolling through holidays, Sunday and Monday. I'm pretty sure it's Boxing Day, stuff after Christmas, whatnot. As you see, just small little stuff all week. And then on Thursday, we move into, the new year. So I took this little screenshot earlier from forex.com, right? For New Year's, the FX market will close on Thursday, December 31st at 5 p.m. So the only difference this week is the market's closing at 5 p.m. on Thursday versus 5 p.m. on Friday. So we only really have 4 main trading days this week. And then again, as for a Sunday, I really like to let this market play out, especially with the fundamentals that we're about to go over, because who knows where some of these markets are about to open up around 5-6 p.m. Eastern. So again, here, I'm going to go ahead and just show you guys. I'm going to filter out the yellows, just like to show you that I don't have it. It's extra noise. Not a whole lot going on this week. And as we move into next week, that'll be for next week's review. Now, number one, the first fundamental thing that we're going to go over is Brexit. Now, if you don't know what Brexit is, it's something that I pay attention to a lot, because you guys know that my main focus for Forex is GBP USD. I love the pound dollar. Now, I wrote up a little thing that I got from the Washington Post here. What is Brexit? So Brexit is pretty much the Britain exit of the European Union. So back in 2016, Britain voted to leave the EU, okay? Now, they had a deadline this year on December 31st, and they finally reached a deal on Christmas Eve. You know, not by accident, right when the markets were closing, they decided to go ahead and make this deal. So that's why I'm saying we don't know how the market's really going to go open up come 5 p.m. Now, what are the problems? Why is Britain trying to exit the European Union? Well, British lawmakers argued that the EU was constraining Britain's economic and political future, right? They're one right now, but they really want to go ahead and kind of become their own separate thing. So they know that short-term pain is likely, but in time, the country is going to be able to reap these benefits of this ongoing Brexit deal. The issues with, you know, them being one is they feel that, you know, everything is just connected and they kind of want to separate. So those are the major problems, and they know that it's going to take time. Now, what do they need to happen in this policy, right? So they want a global Britain, they want independent foreign policy. So they want independent foreign policy. And now this has been a long time waiting negotiation agreement. Like I said, it started in 2016 and it's been ongoing all the way through 2020. So the main issues was that Theresa May was the prime minister and she actually resigned in 2019. And that is when Boris Johnson took over. But the issue is it's not just the one prime minister overtaking all. They still need the majority of the parliament votes on all the deals. So finally, after they got Theresa May out and they brought Boris Johnson in, they had January 31st, 2020 as the official Brexit day. Now, even though that was Brexit day, there was still a lot of outstanding items. So this is why we've been in this 11-month transition period. Now, there's positives and negatives to this transition period. So these are the solutions, right? The deal reached on December 24th allows Britain to take back control of 2/3 of their stock over the next 5 years. And both sides considered this briefing period better than a no deal exit, which was feared under those couple years under Theresa May. And that's why everything has been really crazy. And I'm going to show you guys what this fundamentals looks like on the charts too, right? So again, just taking these words and fundamentals for now, we're going to do it on a technical side later. So with everything going on here, right, what's pretty much going to happen is new borders and new inspections coming soon, you know, with Brexit pretty much, you know, exiting all of this and, you know, really becoming their own thing. Now, what does that mean for currencies on the charts? Well, the crazy thing is, right, if we go back to GBP USD and we go look back on 2016, and if you know the markets, you know what happened back in 2016. So we're going to come back to the month. And as you see right here in June 2016, we had this big sell-off, right? This is when the pound decided to exit deal. So that's why the pound fell off so heavily against the dollar. And you can really see it nicely on the weekly as well. And I'm going to show you guys kind of right here. So it looks really crazy on the charts, right? Meant a lot of pips going on within just this one week, right? See how small these candles are? And then boom, in June 2016, if I go ahead and measure out this candle within a single week, the market had moved 1,700 pips. That's a lot of pips, right? That's almost right here as to what happened when the virus hit in the beginning of the year. So this was huge in 2016. So again, this is what happened when they initially came out with the deal. So I'm really curious to see how this is going to open up come this week. Now, we've been talking about it moving back up into this, you know, imbalance up here, but who knows if the pound really loses strength like it did here, we could be pulling back into some areas that we can be talked about over here. So that's really what I got for Brexit. I really wanted to touch on that. If you didn't know a lot about it, I hope that gave you guys a little bit of insights. I think I maxed out at 100 guys. I'm sorry. I'm not sure if I'm going to be able to allow anybody else in. They're going to be able to catch the recording. I'm going to have it up on YouTube even tonight, now that I'm doing it a little bit earlier today. So that's for Brexit. And I have a little article here, right? Now scrambles to see how it worked, departing from the EU, formal exit, taking on. And there was one little thing here that I wanted to touch on. Even though, and who does this affect? Bankers, traders, truckers, architects, even though day one is pretty much, this is still the beginning, right? And all of this is really unpredictable. And this is what governments do, right? Just like we're going to talk about the US government and, with crypto stuff, this is all just like speculative stuff. We don't know what's going to happen on a fundamental side. All we can do is kind of read up about it and, just be informed. That's all it is. It's the information age. And with the internet, we have access to this information. So this is what we got to continue to do, is just learn about, all these things going on. So that's Brexit. Big things coming on for the pound, the sterling, and the euro in this week, particularly, and going into the new year. The next fundamental thing I want to touch on is the dollar. Now, you guys may have heard that $600, $900 billion stimulus package got sent through last week, but Trump pretty much threw it a curveball and threatened not to do it. And I honestly agree, because there were a lot of main reasons as to why it kind of was a disgrace to the American people, because they were only giving the average individual $600 when they were sending out a lot of money to stuff that had nothing to do with COVID, as Trump states here. So this is still really up in the air. They didn't come on an agreement before Christmas, on Christmas Eve. So again, very up in the air for this week. I'm not sure what's going to go on. And that's why we're going to go ahead and let the markets open and kind of see how it does here. But the thing about this is this could spark a government shutdown, because part of that package allowed money to go back into the government. So if the package doesn't pass, that means the government doesn't get to print more money, which means we could be going into another government shutdown. So this is for the dollar. Again, death of the dollar. As they print more money, it's going to continue to go down. That's not a new story to anybody. The third fundamental thing I want to touch on is crypto really quick. So if you guys have noticed, right, over the last, couple months, couple weeks, we have had a huge movement up in most of our cryptocurrencies. Bitcoin is at all-time highs, around 27, 28,000 right now. And, this is something that, for long-term investors, they don't mind whether they get in at 10K, 20K, 30K, they're holding for the potential 100K run. Now, for us retailers, I wouldn't advise getting in at all-time highs. We would want to wait for, some smaller pullbacks. But, again, with all of the stuff going on with the dollar and Brexit and all that, Bitcoin's kind of like a safe haven for people, just like metals are for some people. So a lot of money is getting pushed into this. Now, the cool thing about this is, a lot of people don't get involved in Bitcoin because it's the biggest crypto out there. So what I like to focus on too is some of the smaller ones, Ethereum, Litecoin, Ripple, and something really big happened with Ripple over the weekend, right? So the SEC, which is the Security and Exchange Commission, pretty much charges two of the executives with unregistered security offerings. So what happened with Ripple was it dropped from about 60 cents all the way down to 30 cents to 25 cents. So, right now, and it's funny that they do this right on Christmas, and this has happened in the past with other metals and, other index funds, is they'll go ahead and drop this excuse, right? News is the excuse. They drop the price over 50% so they can go ahead and get their hands in. They scare people so they can go ahead and get their money in it. And that's the thing about governments and central banks, right? They're not going to let us smaller people, retail people, get into the markets without them having a piece of the pie. So that's why crypto's been so speculative over the last 7 to 8 years. It's because they're waiting for all the governments, all the companies, everybody to get their hands in first. As everybody else is pulling money out of crypto right now because of the drop, they're dumping more money into it. So it's kind of like a sale for those that are, kind of experienced and, been watching this stuff for a while. Cool. One-on-one. Cool. Everyone's following along. So I really wanted to go over those couple things, right? Those fundamentals before we dove into the charts. Because again, it is important. We need to know that these things are going on before we dive in. And again, it's just like if you look at Ripple and you don't look at fundamentals, you would have no idea why this candle happened. But now just with one little, article, one little, maybe Instagram post that you saw one of your mentors show up there, what's actually going on, and you can go ahead and put what on a technical side to the charts. So that's pretty much what I got for fundamentals. Cool. So we're going to start with the dollar index, and I obviously touch on GU, and then I'm going to ask you guys to go ahead and drop the pairs that you want me to go over, because again, maybe you don't like trading GU, maybe you don't really follow USD CAD, maybe you like crosses, maybe you like some exotic pairs. USD Mexican peso I've traded before. So we're going to go into a lot of charts today on it, and I am excited to do that, because again, it doesn't matter what asset class I'm looking at, it doesn't matter what index, what crypto, what Forex. I just got to look for the same thing over and over and over again. And even with the small confirmation checklist that I have on YouTube, that's more than enough to give you 5 to 7 confirmations to get into something. And I really want to continue to, provide multiple confirmations that we can use and make more videos on that coming up. So as you look at the dollar, I'm not going to do any higher time frame stuff. We did have some small retracements last week back up to the upside. We pretty much were playing in that range above 90 after we filled this little gap here. So again, just kind of consolidating out. It was Christmas week. We pretty much stated last week that that's what was going to go on, right? We made a run on the highs to start the week. We came down, ran the lows at 90, and then we pretty much stayed in between that price. So right now, again, nothing saying that it wants to be bullish. We have the same prices listed out that we went over last week. So I'm not going to do anything with the dollar index overall, just looking for more continued bearish bias. Now, if government starts shutting down and people start pulling their money here, pulling their money there, we could see a smaller retracement back up still. But overall, for now, until I drop a chart on Monday to see kind of how price action opens up this week, we're bearish on the dollar. I would not change that bias. The higher time frames are always going to give you the most effective bias. So what does that mean for GBP USD, right? Now, again, with the bearish dollar, and I don't want to be a broken record here, but you guys know we've been trying to move into that higher time frame imbalance over to the left. So even with the confluence of bearish dollar moving this up, this Brexit deal could have a huge impact on whether this price actually breaks above all of this liquidity right here, right? It has a huge influence on whether we actually get through this or not. Because again, we could open up today and just, absolutely be under, 132. We could come back down to 13,000. There's even some more imbalance hanging out down here at 1.26. So we really don't know what's going to go on here. All we can do is go ahead and dive into some smaller time frames and see that, maybe Brexit doesn't move it a whole lot. As you see, the daily, right, what happened last week is we did effectively, really nicely trade back down into a little bit of, imbalance and down candles up here. We then made more new highs. So right now we're kind of in this range. So as we go down to the 4-hour, and I didn't write down the confirmation checklist on my charts for this week. You guys should have it written out, printed out on your wall, looking at it every single day, and you should know exactly what you want to be looking for. Now, as we go down to the 4-hour, right, what do we see? Again, we know that these are kind of some equal highs, some double tops. This is where people maybe sold off to end the week last week, take a little bit of money off the table. Also where buyers are taking profits, right? You always got to think of it both ways. So as we open up later today, what we want to look for are just those key things. We want to look for maybe some imbalances that the institutions are going to come back to reprice in, maybe some deeper institutional candles where they got to come mitigate. So as I kind of look at the charts here, as we kind of start looking left, there's not a whole lot going on. We got a small little imbalance here on the 4-hour. So maybe we'll check that out on an hour chart. Could be something to look out for. As we move further down, right, this was a really nice sell to buy movement. We came down here. And overall, right, just very clean price action to the upside. Before they announced the Brexit on December 24th, right, we were very bullish on GBP USD. And I am still very bullish. We just need to be weary with where this is going to open up to start the week. So let's go down to the hour, see if there's anything that they may go open up into, right? Where does that 4-hour imbalance lie? In a really nice bullish hour candle. So this is something that I would look out for this week. As long as we don't get a major drop off to start, this could be something that we're really looking at. And again, you never want to risk anything up under that low that you're looking at. So if you're looking for any entries up in here, I really want to have a stop loss up under the whole price of 134. And if it does break below this, you need to, again, just reinstate your bias and say, hey, it needs to drop further into this next area, right? Down candle, we already played off the top of it, right? Where did that play off of? This down candle, right? So hopefully, and I know a lot of people took advantage of these buy setups last week, right? Retracement back down in the candle, buy it up, retracement back down, buy it up, retracement back in, buy it up. If we're bullish on the pair, just look for the smaller retracements, right? I don't show you guys a lot of, Elliott wave stuff, but again, the market's always moving. So I haven't even used that tool in forever. Let me see where it's at. I might be hiding it from myself here, right? So again, just Elliott wave impulses, right? 0 to 1, 1 to 2 pullback, you enter on that pullback, 2 to 3, right? 3 to 4 pullback, and then 4 to 5, right? And the other crazy thing is, right, if you're looking at these kind of wave patterns, and again, this isn't technically, on an institutional side, but this is something that I learned early on and on a retail side that has helped me when it comes to looking at the market in an institutional way. A lot of times these moves are going to be of equal distance. So, I haven't done this yet, but look, if we were to measure out 0 to 1, right, this was about a 300 pip move. So as you wait for this pullback down into whatever you're looking at, right, maybe it's this down candle, maybe it's, a deep Fibonacci retracement as we take it from 0 to 1, right? We could see we played right off the 61.8. As we look for these, you enter on a pullback, and then what happens here? Let's see how many pips we ran, right? About 260 pips. So not to the T, but again, you could look at that 250 to 300 range and be able to scale properly as you go up there. And I know a lot of people took advantage of GU last week. So I'm very, very grateful that you guys were able to see all this as well. But, overall, right, still very bullish on this. I like the double top that we made last week. So just looking for any pullbacks, right? We really like this candle here. This is what I'd be looking at, right? We got this last down candle. Now, what prices could we be looking for? 34 as a stop. Here's 34.50. Now, again, this is for a 50 pip stop. Personally, right, if you're more of a swing trader, you're looking to hold all week, that could be something that you take because, again, it's all about risk to reward. If you enter here with a 50 pip stop, right, target the highs, right, you're already over a 3-to-1 ratio. So that's exactly what you want to be looking for, right? More confirmations, right? Pull out your fib, deep fib retracement, 70 to 79. So, right, higher time frames, bullish market, trend analysis, bullish market. Number 3, we have an imbalance. Number 4, right, we built up a little trend line of liquidity above the imbalance. Number 5, I'm trying to make this a little bit smaller, right? Number 5, we have that sell to buy action, that institutional candle, whatever you want to call it, right? And then the most key thing is number 6, and that's that time of day. Just like we saw last week, we just kept selling off. We blew through any of these little areas that we were looking at last week, and that's why you don't enter at those times. But what did happen at 4 or 5 a.m.? What did happen at 10, 11 a.m., right? Those key times that we look at, that's what we want to see to enter the markets. So this is what I would really want to be seeing. Now, another big question that I get is the reaccumulation, like the redistribution. Colton, how are you going from this analysis here on the hour and then entering on a smaller time frame, right? What are you looking at? Where are you looking at on smaller time frames to get in, Well, we have this imbalance and we have 34.50. Now we haven't even marked up the opens or the 50% of this institutional candle. So even if I were to take the hour, right, we're at 34.30. So now we've taken a 50 pip stop, and now maybe we've brought it down to a 30 pip stop, right? Now it's a 6-to-1. You just took it from a 3-to-1 to a 6-to-1, just waiting a little bit longer for that institution. Now, if it rejects off of the imbalance and you don't get in, that's perfectly fine. You don't have to be catching these every single move. The point of this is for you to see this, because I promise you, right? I promise you, if you can just seek this out and not catch every move and just wait for that exact one that you're looking for, you are going to see consistency, right? It's happened for me. It's happened for a lot of my students over the last 3 years. And again, like, I just thank my mentors for introducing me to this, because this is what it's all about, right? There's no major trend lines, no major support and resistance. This is really how the market is moving on an institutional level. So I don't really use the 30-minute chart. If you guys haven't noticed it already, it's not personally one that I like. So I'm going to go ahead and knock down to the 15-minute, and we'll go inspect, right, what actually went on within this hour of price action over here. So we'll pull up over here, right? You see, we still kind of got that same liquidity trend line, right? This is where they have all those buyers in, which is fine, right? These buyers, just like us last week, right? We were able to make profits on this, but a lot of people that are holding more of a long term, right? They still have these buy positions in, and they move their stops and profits up here, right? And just kind of like throughout it. So what they'll want to do is, before they move higher, come back, mitigate, take some of these people out, reprice, and then go ahead and continue the market to the upside. So as we inspect on a 15-minute, we can see that, hey, 34.30 was the open of the hour candle, but now we have something even smaller. And again, it all comes down, if you're going to move down smaller time frames, you just have to understand you're looking for smaller risk. And you may be, again, you may not be catching that move, because it could just take off from the 50-point risk. It could take off from the 30 pip risk. So as we look here, right, we have that last little down movement. And this is what you really want to see. Why? Because this last down movement is what purged the little bit of liquidity that was still hanging out here. So now I can go ahead and say, all right, where's this line at? And this actually ends up lining up with one of the key quarter levels that we like to look at. See how it's 134.25? So now we've gone down to a 25 pip risk if we're looking to have a stop up underneath the lows. And again, you could just wait. What you want to see here is that evidence of them pulling down, right? Maybe they'll have this rejection off the imbalance. Let them do that, right? Maybe they'll create more money. They come down here. Maybe they create another one. And this is what I'm talking about, right? Reaccumulation. Wait for that right time for them to dip down into these candles. And then what you want to see is that evidence of them taking back off. You don't have to catch this sniper entry. It's not going to happen every time. You could wait for that retest back up. But that's what you want to see at the right time. That's what I mean by catching reaccumulation. And, here's something too. It's not always going to be picture perfect, right? Every accumulation, every distribution is not going to be the exact same. Honestly, every chart is a little bit different, right? Every asset is a little bit different. So, again, you just got to figure out what works best for your eye. It was nice to see that also 34 psychological level play worked very well. Yep, 134. Again, these 100 pip levels, especially for GBP USD, I really love how it respects them. So, again, that's a 25 pip risk. If you wanted to dive deeper into this, right, say we come into London session on Monday or Tuesday, and we're making a little pool of money, maybe right here at 30, you just want to wait. And as they dip into there, you want to see that rejection, whether you get the sniper entry and take the risk, or whether you wait for that pullback and have a stop loss here. That's how you want to go ahead and attack the markets. This is the same exact thing that we're looking for over and over and over again. And Let me go ahead and give you guys an example. So what time was this at? So see how this, right? 8 o'clock, 8:15, right? It's within that first 15, last 15. So as this market pulled down below that money, right, we would have been looking at, maybe some stops up under here at 94. As this market pulled down at 8:15, right, you could maybe find whatever entries in there. So let me go ahead and just show you guys a little bit, how some people took advantage of this entry off 134 last week, right? So now as I look at this price action here on the 5-minute, this is how you just, kind of like slowly moving up that stop. Do I need a stop up under these wicks? No, you could pretty much, have it up under this. Now, is it going to be close? Absolutely. The smaller timeframes you go, the closer that the market's going to be to, right, small risk, high reward. So even with a stop up under this wick, you see this kind of, equal money here. Not only did they have this here, but they also had this. Sometimes they take two really nice pools of liquidity. So what happens as they move the market down at 820, 825, 830? So again, maybe this wasn't exactly it. Maybe the 134, entry here, stop up under here would have been it if you were entering on the whole level. But overall, this wouldn't have been something that I would have entered in that first 15, last 15. But again, there were other opportunities to buy into that market kind of throughout. And then even if you entered within here, right? So this is that 330, this is that London entry. What happens? You enter during London, you go into profits. Maybe you don't take them, even though market moved up 30 to 40 pips, you hold your hold. As long as you hold that original stop here or here, you're going to be good to go ahead and catch that market, kind of more to the upside as it kind of continued up and everything. Is liquidity retesting orders. So liquidity is pretty much just like retail money. This is what they make. This is like all retail buyers, right? Because as you can see, and again, it's only retail buyers for a certain amount of time, because as smart money traders, we can see that, hey, maybe you didn't get that 330, 335 entry here. You let the market trade up. As it pullbacks down, what did it pull back down into? That open of our down candle. So who knows, maybe right at 4 o'clock, you end up sniping this at 34.10 and you run the market up to these highs. Now, again, not everything is going to be picture perfect. Sometimes they don't pull enough liquidity out of the markets. And I'm glad I just kind of thought about that, because this was probably the right entry here at 4 a.m., but they needed to come grab this little bit before they continued above these higher prices. Does everybody see how that makes sense? How even though this could have been the correct entry, it's not going to be the same every time. They're not always going to be able to grab all the liquidity they need. So what did they need? They had so many buyers up in here. They had to do one more small sweep to the downside of the market near that whole level. And then we see that very fast movement to the upside. So that's really how I see it. I hope that helps. Yes, 111, cool, perfect. So that's pretty much for GU. Waiting for that pullback this week down into that one area that we're looking at. And again, if that area doesn't get tapped within our right time, I'm pretty much just going to let it be and, pretty much go from there. Sunday overviews are kind of fun because you have no idea how it's going to go, but this is what we can look for. So hope that helped with GBP USD. I don't really use volumes, Jamie. Again, they could be very useful for certain people. I just personally, I used a lot of, stuff like volume and moving averages and stuff early on. And I just think they lag a little bit to what price action's actually showing. I really just like to look at time and price. And again, I may miss a lot of opportunities that maybe other mentors are taking advantage of. And that's just personally how I like to trade. I just got beat too much trying to always be on top of the indicators, on top of the volumes. But again, they have very, great things for certain people. So I'll stop on GU. That's my main area there. We'll touch on UCAD quick, and then I'm going to go into the pairs that you all would like to see. So let's dive back into the 4 hour, just kind of review last week. Go ahead and delete everything off, right? So what happened? Market opened up right here last week, right? What did we do? We had that very fast Sunday movement, run high, right? And then we made a low. And again, like I said, we kind of consolidate in those ranges. So this is kind of where UCAD was at all last week. As we gone on to the hour, right? Open, run high, we drop low. So what you can do, right? This is, right? This is this week's high. This was that week's low. Now you just want to wait for deeper retracements. If you want to look for this sell, right? You wait for them to come back into that last up candle, right? What happens when they trade off that last up candle? They come trade into the smaller imbalance down here. So again, just like so many opportunities, you just have to wait for them to personally get within those prices at the right time, right? When did this happen? 10 a.m., 11 a.m. What time did this happen? 10 a.m., 11 a.m., right? And obviously, you know, Thursday and Friday was pretty slow with Christmas and whatnot. So for UCAD this week, right, what should we be looking at? Again, bearish dollar. So we would want to see this continue to fall. If I would to look for a possible resell entry here, right? So we had this last up candle. We already traded back into it. Very nice all the way through. What I do see here, right, is we have this big trend line of liquidity here, right? What lies above the trend line. We got a little bit of imbalance hanging out there. And what's above the imbalance, right? We have that last up to down candle. So again, same exact thing. We're looking for these three things. And now we just wait for the right time to enter these markets. What do you want to target? You want to target equal lows, imbalances, and you know, liquidity, the same exact thing. So what am I going to mark off to the downside? We have pretty much these equal prices here, right? What they did to end off last week was pretty much equal out these little wicks over here. So again, pool of money, what's under that pool of money, a little bit of imbalance. And then what's up under that imbalance, right? We have that last sell to buy structure, right? So looking at, you know, maybe this price of 128 for the market to continue back down into, right? And now again, this doesn't have to be, you know, your buy positions. This could be your profit target if we're entering somewhere up here. And we're going to, just like we did with GU, we're going to break this down on a smaller time frame to see how we could go ahead and properly enter a sell position here. Ryan, I personally am not an ICT student. I have consumed quite a bit of his content on YouTube since December 2019, but I haven't been enrolled into his course. Obviously, we have a lot of the same language and whatnot when it comes to the markets and what, but no, I was a personal student of the IM Academy for 3 years. How do you identify an order block? Jeremy, there's a lot of videos on that on my channel, ICT's channel, other Wyckoff channels. I would go watch some in-depth videos on that. Combining, and I'm just going over some chat stuff here, combining imbalance, breaker, liquidity grabs, and everything you mentioned, bro. It's amazing how far I've come in a short time. And thanks to people like you breaking it down. God bless. Are you still in? I'm going to touch on the mentorship stuff at the end of the call. So I got you on that, Augustin. So overall, this is what I'd be looking at. So just on an hour time frame, right? And I'm not here to give you guys a whole bunch of setups, right? This is just maybe one setup per pair per week. I would be looking at something like this, right? A 5-to-1 ratio, risking 15 to catch 75. And once you're an experienced trader and you've been in the markets for long enough, you know that you only need a certain amount of trades every single week. Me personally, I don't take more than 5 trades per week. I look 3 to 5 good setups. Do I always take 3 setups? No. Do I always, are there more than 5? Absolutely. But you want to look for your most opportune. So break this down on a smaller time frame for you guys, kind of show you what's going on up here on our entry area. If we were to look at this going into this week. So as you look over here, right, everything's pretty clean, right? Up candle, down move, we trace back into it, clean price action, right? You guys can see the evidence of them coming back and mitigating those last up candles, come back and mitigating those last up candles, right? Drop down, trade back up, 145, trade back down, right? Come back up. You know, again, this is what back testing is, right? Look at this, up candle, down, trade back into it, right at that 8 o'clock hour. That fast move down is what left this imbalance hanging out right here. So now what do we look at this week, right? This little bit of structure here, stop up above this wick here, right? And go ahead and let the market down. Now, again, some people are going to enter on the 50% of this, right? And have a stop up in here. Others, right? This is an aggressive entry. This is a 15 pip stop entry. More people are going to look for a moderate entry, right? Maybe it's the wick of that last up candle, right? Right here around 76. And I'll go ahead and make it a quarter level at 75, right? So some people maybe wait for the moderate entry. Some people are going to wait for that safe entry. Maybe they're waiting for the open or the 50% of that last up candle, which would be at a price of 28.80 with maybe a 7 to 8 pip stop. So again, it all depends on the trader. Everybody's going to be a little bit different. But if we all can look at these same things, find the liquidity, find the imbalance, find the candles, that's the best part about it, is you get to choose. And if you're not confident yet and taking these setups on your own, then just continue to watch it play out. That's all it is, right? You can see here, right? Same thing happened to the downside. Whole downside pool of money. What do? One candle through it. They trade back up, kind of retrace back. So kind of this price action from last week shows that, hey, maybe this week we get a little bit start to the upside and then go ahead and continue to move down. But this would be my main outlook for UCAD this week. Obviously, again, more bearish action. If we wanted to position ourselves, I would wait for this retracement back up into here. Other than that, everything else has already been played pretty cleanly. So that's what I got for UCAD. I'll stop boring you guys though. Let me go into what you guys want to see. On my UCAD, there's a strong bullish candle right now. It depends on what time frame you're on, right? Yeah, there's a strong bullish candle, maybe on the 1 hour, 4 hour, whatever it may be. And as you guys can see, right, it isn't engulfing our candle to end off last week. But again, that's cool. It wasn't in the right trading time. So maybe that's going to allow that price action to trade back up here and then go ahead and move back to the downside. So let me run back up, go through some pairs. I'm just going to go through here. Could you look at GA and GJ? Absolutely. Now, the cool thing is, so I'm going to start with GA and GJ. The cool thing is they can correlate. So if we're looking for the pounds, now again, the pound pairs are going to be a little crazy this week. If we're looking for maybe the pounds to have a bearish pullback to bullish outlook for this week, we could somewhat be looking at the same thing for other pound pairs that start on the front end. So like GBP AUD, let me go ahead and add that. And then GJ, go ahead and add that. So let's check it out, right? Hopefully we can see some kind of similar market structure, right? And that's the other thing. If I give you the outlook on GU, you can go look at GA, GJ, right? Euro GBP, which would be flopped, and you can kind of look for the same thing. So let me dive this out back on the 4 hour. Let's start on the daily. Just see kind of where we've been at here. So again, I just see beautiful market structure to both sides, right? What do we see on a higher time frame? We had this liquidity. What did they do? They ran it, right? Traded low, came back, retested that up candle, sold off. What did they sell off into? Whatever low was made down here, right? They dropped one candle underneath the low, and now we've traded back up into kind of the imbalance that they left on this daily candle. So again, right now, we're obviously ranging on the daily between these two prices. So we'll want to go see what it looks like on another time frame. And obviously right now, we're pretty bearish on the pair. Now, as we go down to the 4 hour, right, what do we see? Because again, the daily, that's not the type of trader I am. I'm more of a day trader. We just need to know that overall we're bearish. Now, as you look at the 4 hour, what do we see? All right, so higher time frame down. Trend was down. We're kind of consolidating in this area here. Let's look for some imbalances, right? Let's look for imbalances to the upside. Well, above here, right, we have some imbalance hanging out right there, right? Now to the downside, nothing here on the 4-hour, nothing here on the 4-hour. And then we do see kind of the gap / imbalance hanging out right here. So now on the 4-hour, I've shown imbalances. Let's look for major pools of liquidity. And again, like if you look for your imbalance, most of the time, the liquidity pool is going to show itself, right? You can just see this is where the retail sellers came in. Now, again, retail sellers, they got to let them make money sometimes, right? They're going to make money sometimes. But, you know, personally, we're just going to wait. So this is that retail sell trend line here. And then as you look to the bottom, right, kind of these double wicks here could be another liquidity area. And then as we look at for those last up to down candles, we got one hanging out there. And then to the bottom, right, there isn't really anything too clean. We do have this candle. We had a little bit of retracement back into it already, but see how they're always making the same things, right? Liquidity, imbalance, candles, liquidity, imbalance, candles, right? That's, again, this is what I base most of my stuff off of. And I just wait for these prices to be touched. Nothing inside of here on the 4-hour. So it's nothing I'm going to mark up. Now, again, GA this week may not reach this imbalance on the 4-hour. It may not reach this imbalance to the downside on the 4-hour. So that's why if you are going to look for a setup, we got to come to a smaller time frame because that higher time frame isn't really going to show us what's up. So now as we go down to the hour, right, what do we see? Let's look to the upside. I'm meeting some more people, and I'll look back in the chat after we're done with GA. So as we look back to the upside, right, again, very fluent market structure. We had a last up candle. We had a fast sell off. What happens when they have the sell off? They come back up and retrace into the open of that down candle, of that up candle, and they trade back down into what? Whatever liquidity is hanging out right here. So they trade back into all this here, and now they're just hanging out. Again, it was the end of the week, so they're just kind of, you know, hanging out there. So if we were to look for maybe a bullish retracement to go ahead and sell off of, if this candle already got mitigated and filled its imbalance, right? Where's our next up candle to down move? It's going to be this one right here, right? Where is the imbalance? So let's do this. And for the next couple of pairs, I'm not going to talk as much. I'm just going to give you guys some setups, right? We got imbalance here. And, you know, again, you just wait. What are you going to target? Liquidity. You're going to target imbalance to the downside, right? What's above this imbalance to the down? What's below this imbalance to the downside? We got that other institutional candle, right? So just like for GU, right? Notice, even though I'm pointing out a possible sell structure entry here, you just wait. You always wait for both sides, right? So GU, like I didn't show this sell setup because I'm not really looking to sell it. I would rather buy it back up into this, but it could also come back up here and sell into this. So see how this area at 134.25 we're looking at, when you go to GA, right? Same type of structure. If we let this market go ahead and sell back off into this area, what do we want to look for? Stop underneath that candle. Now, again, with cross pairs, you're going to have bigger stops, right? So 77, I would look at 77.20 right here, right? As this entry lies right here about 36, I'm going to go ahead and make that 35. I just like even numbers. If you were to do maybe a more aggressive entry, you know, maybe you're looking at that half level price of 50, 77.50, which is just above the wick of that institutional candle. So again, 30 pip risk inside of here to go ahead and run the market back up, right? And this is beautiful. We had a liquidity sweep here. We had this down candle form. We saw the rejection off, right? We had the mitigation play already. off of this. So just like they came back and mitigated this candle here, they would come back and mitigate this candle here, and we would want to take this back up. Now, if this gets left open, that's what you want to target. If they end up coming back and retracing into here to sell off, you're just going to have to find whatever imbalances they left and price right here to go ahead and target back up. And either way, don't take the trade, whether it's a 3-to-1, right? So if we're going here, 30 pip risk, I would really want them to leave this open so I can go ahead and target, or make a new, right, buy to sell candle right here, right? If this was a nice dark blue candle, and then after they made a nice red candle to the downside, that's going to leave some kind of other redistribution here that we could go ahead and buy the market back up into, or, you know, even take it higher into one of those higher time frame balances. But, you know, other than that, if this doesn't hold on GA, what do we look for next, right? No buying opportunities here, no buying opportunities here. And then we kind of have a bigger imbalance over here to the left side. So then we would start marking this into smaller timeframes over here. So again, similar setup for GA there, GJ. Let's see what happens. And again, they're not always going to be perfect because this is compared to the yen. The other one's the Australian dollar. The other one's the US dollar. So everything's going to be a little bit different as we're going on here. On my UCAD, there is an imbalance. If the imbalance is not taken anytime soon, is it still valid? Let's say after a month. You know, personally, again, we've seen, and I've even pointed out, right, there's imbalances on the dollar index that have played back from 2018, right, 2016, whatever. There may be mentors that say, you know, certain amount of price action back end, you know, may not be relevant. But think about this. What about all the swing traders? What about all the long-term traders, right? What about the institutions that were getting in years and years ago? You know, there's people that don't even look at the daily chart under, they only look at weekly and monthly charts. So if they're entering on a weekly imbalance from 2016, you know, why would that price not be relevant? You guys kind of get what I'm saying? Like, I think prices are always relevant, especially if it was left open, right? They could not come back for days, weeks, years. And once they do get there, we just have to show evidence of our confirmations showing us the same thing that they would be looking for, and we could take advantage of it. Looks like mitigating the imbalance. Do I have to put a limit order or wait for distribution in lower time frame, like 15-minute, 5-minute, 3-minute? So that's a great question, and I love the way that that you put that. So you guys know that I personally don't like limit orders, just because, again, it's something that I used in retail. I just got hurt by it so much that I just personally don't really use it too much. But this is cool for people that don't want to dive into smaller time frames, for people that may not have as much time, you know, like me, that's kind of like, you know, a full-term trader, or something like that. You may have to utilize limit orders, right? You can't wait to look for that smaller time frame distribution or reaccumulation. You might just have to set, you know, a limit order at 134 and have that stop and just say, hey, you know what I mean? Because I don't have this as a full-time thing right now, I got to go ahead and just let the market, you know, play into these levels that I'm looking at. But again, for me personally, because I have the time to be up during London or be up during New York, or, you know, look at Asian session consolidation, I just like using market executions. So again, yeah, for your question, right? Either use a limit order or wait for those smaller time frame reaccumulation, redistributions. We'll touch on EU, US 30. We will touch on indexes. This will probably be a 2-hour webinar. Cool. Glad you guys are enjoying. Appreciate you, Delton. So I know I went really in depth on GU and UCAD and GA, so I'm going to make this a lot more simpler on you guys. I want to give you guys setups. As you see, I love to talk, but I don't think, go ahead, you know, drop a 222 for me if this is going well for you guys. Again, I love to talk, and I hope that what I'm saying is helping you guys realize things on the charts, because it takes time, right? I can't get out everything that I want to say just in a couple minutes on a chart. I could literally just, you know, add all the Forex pairs and just go boom, 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 and show you guys all my confirmations at once. But because you guys are new, because you haven't been through an exact course, you know, when it comes to the basics and all that, I know that I need to repeat myself and say things over and over and over again. Awesome, awesome, awesome. And we got good retention on the call. Still got 88 people here. So I appreciate y'all. I'll up the limit next week. I guess I'll have to upgrade my Zoom. I'm already upgraded to one of the pros. I didn't know that I couldn't go over 100, but it's been a while since I've done some Zooms for you guys. So to sum it up, if you have liquidity imbalance in institutional candle, you will still look for the Wyckoff play out once price reaches there. That's exactly what it is. I could have 7 confirmations, but if I don't see that evidence of the Wyckoff, which again, when I say reaccumulation or redistribution, that just means looking for Wyckoff structure. And again, Wyckoff structure isn't going to be picture perfect every single time. It's going to be a little different for every single chart. It's going to be a little bit different, but that's exactly what I look for. Can you go over consolidation again? You should be on Go Live, bro. Serious. Yes, nice to be able to attend the Zoom in my time zone. Thanks for allowing us to have a chance to pick a preferred time. Yeah, 2 p.m. is great for me too, because after this, I could throw it on iMovie, edit it up a little bit, and instead of having it upload all day on Monday, I can upload it tonight and hopefully be on YouTube for you guys later today. Sometimes it'll be an M or a W. So cool. I see M and W questions. I see consolidation questions. I'm going to touch on that. Can you show another example of, I like that. I like that autocorrect, white golf. That's funny. Are you in entrepreneurship and anything else than trading? Cool. So I'll touch on that. Let's step away from the technicals real quick. So for those of you that don't know, I actually went straight into college from high school, right? I actually went into college for medical, for sports medicine, quickly got out of that. Medical just wasn't really it. I went into business management because at a really young age, I'm 24 now. So about 2 years into college, I was working at a restaurant. And I pretty much got offered like assistant manager position. So through my 4 years of college, I was doing business management and marketing because I thought I wanted to manage a restaurant. I love food. I love culinary. I love service, obviously helping people. So, but entrepreneurship was never really something that like I knew of. It's not really taught in university or schools, even though the college that I went to, Florida Gulf Coast University, has a great entrepreneurship program. It just wasn't the cool thing to do. You guys know what I mean? Like, just like Gary Vee wasn't the cool person over the last, 10, 15 years, but now entrepreneurship is huge. So it was actually, I was in my 4th year of college, right? Just studying general business, and entrepreneurship kind of found me in the classroom. The kid next to me was looking at these charts all week. I asked him what was up because he was making like $10 on his phone. And that's literally what I made per hour when I was cooking. And I asked him what was up. So, while I was in the classroom studying business, I say entrepreneurship and trading found me. And then I pretty much took it full force over the last 3 years. I've done nothing but study entrepreneurship, study successful business people, study trading, and these mentors, people that had the results that I want, because the professors that I was listening to in the front of the classroom were talking about old marketing tactics and old business, and they really teach you how to work for somebody else, whereas entrepreneurship teaches you to work for yourself. So, again, I've been part of, I built kind of my foundation around affiliate marketing and MLM and IM and trading over the last 3 years. But, my bigger picture is not only, service to others, but, just helping people getting into that similar mindset as well. Cool. So let me touch on the M and W and consolidation area. So again, you guys know that the market moves in 3 ways. It moves up, down, or sideways, right? So when we're moving in that sideways market, that's what we call consolidation. Now, again, there's so many different terms for this stuff. So consolidation is a sideways moving market. That's for retailers. Now, as a smart money trader, what is, I don't really see it as, I kind of have a different definition of consolidation now. For me, consolidation is, right? Sellers, buyers, right? This is retail sellers, retail buyers, retail sellers, retail buyers. So what they're doing, what the bigger institutions and banks are doing in these consolidation areas is they're enticing people, lock tool, right? They're getting sellers in the market here, and then they're getting buyers in the market here, and then they're getting sellers in the market here, and then they're getting buyers in the market there, right? They're creating these M's, they're creating these W's, which is great. You can make money on those, right? But overall, on an institutional perspective, these are just pools of money. So now how I see this is you don't need to be in the consolidation. They're just enticing buyers, enticing sellers. And we just wait for them to go ahead and sweep one of those sides, or sometimes they sweep both sides, right? Just like we saw to start last week, they swept the highs, swept the lows, and then kind of consolidated out the rest of the week. All those people that were in last week or trying to, predict the market on Sunday and Monday, they got stopped out. So this is really how I like to explain consolidation to people. M's and W's, double tops, double bottoms, right? To me, it's all liquidity areas. Because Wyckoff can't be perfect every time. I'm going to read these last couple comments and then I'm going to go straight into charts. I'm going to stop talking. I'm going to give you guys setups, I promise. Because Wyckoff can't be perfect every time, I sometimes have a hard time telling whether if it's distribution or accumulation, because I can see both downside and upside liquidity taken out, prices in the middle. Do we mainly decide with the major trend? So what you just typed at the last, right? Do we mainly decide with the major trend? Yes, that's what you want to do. As you continue to knock into smaller time frames, there's going to be all these distributions. There's going to be all these accumulations, right? So you just want to stay true to your higher time frames. And that's also why I don't like to share, a lot of smaller time frame work yet. One, because again, like I'm not doing the personal mentorship right now. And two, like you guys don't need to get caught up in all this smaller time frame stuff, especially if you don't come from a place of knowing the basics and whatnot, because it can just be so much noise to you on smaller time frames. You're going to get out of the bigger picture of what's actually going on. So it's like, and I got you on this. So again, it's like, it goes back to the GA and the GU setups, right? We're bullish on these pairs. So don't entirely worry about this sell setup. You don't have to worry about this, but I'm just saying, like, if market were to open up, consolidate for a little bit, right? Sunday, Monday, nothing's going on. And then by chance, Tuesday morning, you're up for London, right? And it happens to be 315, 345, and they're redistributing. And then you see that money move up and you by chance are able to catch an entry with a stop up here and this here, and you're okay with this 10 pip stop, then yes, take that sell position. But it's like you get to pick and choose what you trade in these markets, right? If you're bullish on the pair, maybe this doesn't add up to your confirmation checklist. Just wait for the market come to here. But as you continue to study and back test, you can really be bringing the market both ways. You know what I mean? You sell up here, right? You properly scale as it comes down. And then once you get down to that new entry, right, I would pull out of most of those sell entries and I can go ahead and buy down here, right? You see people literally sniping the top of a chart and the bottom of a chart. But again, don't be trying to do that as a new trader. It's something that you need a lot of work in. So I hope that helped out. You guys are asking some awesome questions. Setting up traps. Exactly, Chaito, right? They're just setting up those seller traps, buyer traps. Retailers are creating liquidity. Exactly. You are awesome. Perfect. Glad that helped. Okay. Let's do some charts. This is what I'm going to do actually. I'm just going to go ahead and add up a bunch of Forex pairs and I'm going to go over everything for you guys. So let's add EU because I don't have it on my chart. Let's add UJ. Let's add AU. I'm starting with some majors here, right? Let's add EJ. Already got Euro GBP, right? I'm going to skip you, Chef. I don't do the Swiss franc. NU, EA, EJ. Even though I'm doing a Wanda, it doesn't, it's all good. AJ, I'm just going to go through this entire list, guys. ECAD, ACAD, CADJ, Euro NZD, right? And if there's something that I didn't catch, we can, you guys can drop it in the chat for me. But I'm just going to go over these really quick. I'm honestly not going to talk a lot. Gold, yes, I will talk on gold. Let's do gold first, and then we'll go over these. Because I do got gold up here. And then we'll touch on indices and indexes. I don't mind this being a long webinar. So let's touch on gold quick. I'm not going to go into higher time frames. You guys can go look at other webinars if you want to see kind of where we're at with that, you know. But again, with all the printing of the dollar, people really see kind of metals as a safe haven. I said I'm not going to go into higher time frames, and you guys can see, right? That's what they've been all year, right? What happens? We dropped the market in March. People were holding, you know, money. So what do? They invest in the metals, right? Even though since August we've had this pullback, that all this is a bullish pullback to continue higher prices. So again, very bullish on metals for me personally. I really love it. You know, my mentors inside of IM were very, very bullish on metals. So that's what we've been looking at. Cool. Let's go back into the hour. Just kind of wanted to show that for you guys. Is the lagging kind of gone? You guys can hear me. It seems I haven't had any comments about that lately. So maybe it was just kind of the beginning of the webinar that was kind of messing up with the Wi-Fi. Cool. We're good. We're good. Cool. So as we look at the hour, I'll just go ahead and delete some stuff. All right. Where did we open up last week? 2018. So we opened up about right here last week, right? What happened? We had, whoops, I still got my tool on. And this is going to be the last one I go in depth, and we're going to go into all the other stuff very, very quickly. So cool. Market opens up, right? We had a crazy Sunday, Monday, right? What do? They run the highs, they run the lows, right? Within 24 hours, right? Run highs, run lows. They clear both sides, clear all these sellers out, clear all these buyers out, right? Look at all these buyers. Everybody that bought between December 16th, right? All the way, all those 3 days got pushed out in one candle. This is what they like to do. They like to push everybody out very, very quickly. And when you see these big candles, you know that's the institutions playing the game. So that's what they did to start last week. As you see, what did this candle retrace back into? And this was something that we had pointed out and would have been a very nice play for anybody that was able to take advantage of it. This last down to buy structure, we played it perfectly, traded back up, and then pretty much consolidated there through. So what would we be looking at for this week? Bullish mentality. So what do we want to look for? If we're looking for a bullish mentality, anywhere that we could see some kind of bearish retracement to go ahead and reprice ourselves into higher prices. So let's look at it. What are we going to look for, right? We know our higher time frame is bullish. We're trending bullish. Number 3, we're going to look for imbalances. So imbalances to the downside. No, right? This wick is here. So I'm going to continue to look left, look left. Boom, imbalance, right? Right here. Imbalance right here. Now, number 4, what do we need to have above the imbalance? We need buyers. We need liquidity, right? Now, again, you could kind of always mark up liquidity on your chart, wherever it is. You know, I kind of like to use trend lines, whatever it may be, right? We kind of have these two pullbacks, right? This is kind of a little trend line of liquidity we got going on, right? And then again, the reason why both of these line up perfectly is because they had that fast sell off below this liquidity with this candle, right? So boom, we've went through confirmation 1 through 5 right here. So if we want to look for an area to go ahead and, you know, possibly buy back into gold, wherever it may be, this is what I would look at on the hour. Now, what does the risk to reward look like on the hour? Well, this could be your first entry, and I'm going to go ahead and equal these out. So we're going to do 1865 as your aggressive entry. Where would stop loss be? Up under the low. Now, again, when we get out of the Forex and majors, we're going to be talking, you know, a lot bigger stops. So this is like an 80 pip stop, right? From 65 down to 57, 80 pip stop. Where would we need to take this market if we were to look for at least a 3-to-1 off an hour entry? So 3-to-1 is about right there, right? Now, what do you guys notice about where the 3-to-1 lies? And I'm not going to go into this yet, right? We're going to talk about targets in a sec, but it just so happens, right, to run up above actually. It just so happens to run up above what liquidity and other imbalances. We're going to get into that though. Let me delete that. I want to make this green. So cool. This would be kind of your first entry. And again, 3 to 1 looks good. Now, maybe you don't want a 70 pip stop loss, 80 pip stop loss. Let's go to the 50%. And again, I'm going to eyeball this 50%. I couldn't, properly do it. But again, kind of the same thing. I'm going to look here, 1863.42. So I'm just going to go ahead and make this 1863.50, right? So right there. So again, let's make it 1863. So now this is only about a 60 pip stop. Let me make this a little bit smaller. And we'll grab this, right? Boom. Now we have a 60 pip stop, right? It says, when you look at these prices, it's going to be 59.5. Don't worry about those last two. This is pretty much 60, right? Where's your 3 to 1 on this, right? Look how the 3 to 1, right, lies right here where old highs were, right? Now, if you were to wait for something a little bit deeper, we don't have anything on the hour to show us maybe a deeper retracement than this, but maybe on the 15-minute, we could go ahead and have something a little bit less than a 60 pip stop. I'm going to check the chat. Going great. Can hear you perfectly. Is 1865 a good buying opportunity for gold? I guess I just answered your question there. Nicola, glad you noticed that before we tapped into it. I took that trade. Sam, I'm guessing you're maybe talking about this 7 a.m. candle. Beautiful, right? And it's cool. We'll knock this down on a smaller time frame. And there was probably, right? What do you want to see within this wick? You want to see that smaller time frame accumulation test up. Took that trade imbalance. When you calculate the 50%, do you not calculate the wicks? Great question. No, I don't calculate the wicks. When we talk about the 50%, it's the body of the candle. So the open, so when you're entering, it's either the wick. There's no wick on this candle. There's no wick on this candle, but that would kind of be your first entry. The open will be the second entry. And then the 50% of the body is going to kind of be that third entry. Only the body. Yes. You could take 50% of institutional candle. Again, the way I was taught was the body. If people use the wicks, maybe that'll, fit in. But this is what I can say, right? If there is a lower entry, like if I were to take the 50% of this hour candle, right, all the way to the wick, and let me just show you guys here, right? See how I'm kind of spot on with that 50% there. If we were to do the wick, right, more than likely this 50% right here on a smaller time frame is going to be the open in 50% of a 15-minute candle. You guys kind of get where I'm getting at? So there's no reason for me to mark it up on the hour chart. I'd rather just go mark it up on a 15-minute chart. Wait for price action on the 1 minute when we get into that institutional candle to get minimum stop loss. Yes, Jamie, but again, a lot of people get too caught up in smaller time frames, and you guys can't always be entering on the minute time frames. But again, if that's where you're at in your trading position right now, that's exactly what, if it works for you, continue to do that. When you have an imbalance and IT candle next to each other, which do you consider more when entering the trade? So again, this is another great question, guys. You don't have to use the imbalances and the 50% as entries. I would really not advise to use them as entries. Now, on higher time frames, yes, we're going to get rejection off of it, but the reason we get rejection is not necessarily because of buyers, right? So, and let me kind of, answer that. The reason we would get a rejection off this 50% right here, right? If market were to come trade down in the 50% of this imbalance and take off, it's not because there's a big pool of buyers here. These are sellers taking profits, right? They got the institution's got to come back and reprice into this imbalance area. And when they reprice, they're taking profits off the table from the sells. So again, it's not necessarily people entering, it's, people taking their profits, this, that, and the other. I very rarely enter on an imbalance with smaller time frames. It's normally more of a higher time frame outlook for me. So I hope that answered the question. Executing. Can you talk about the FU candle? I'm not going to talk about the FU candle a lot, right? Again, there's other videos that you can go in. Again, what you want to see is that institutional FU candle, right? Raid, liquidity to the left side, right? And again, these are only just a couple confirmations. You want to see that candle raid liquidity to the left side, trade down, show evidence that the markets bought to sold. Because again, what do they do? The trend is bearish, right? But the institutions don't want everybody to catch. They don't want all of these retail sellers to catch the money with them to the downside. So what do the banks do? They drop a $1 million lot, $2 million lot buy position to run the market up, normally 30 to 50 points, whatever it may be, on the liquidity. And then quickly, instead of having their sell positions here, the institutions then enter their sell positions here, which makes that market move down very quickly. So this is an FU candle. It literally, F's ups all these early sellers, and then they move down. And this is where their first original sell entry was. And then as they pull back into that institutional candle, right, this is where they start repricing. This is where you can get into kind of those second entry retests. And then again, you want to continue to see that evidence of them kind of moving down. That's awesome. Thanks. Are institutional candles the same as order blocks? Yes. Again, so the market, or the term was coined. Order block was coined pretty much from ICT. An order block is blocking, the retail orders over here. And then, over time, I believe, more individuals that, whether, they learned it from ICT or other, market maker courses or whatnot, institutional candles, but they're all the same thing. Makes a lot of sense. Can you talk about risk management? I mean, we can split order into 2 entry. Yes, we'll talk about entries. Cool. And I know, I'm sorry, I go for a long time. I apologize, something came up. I have to run. I will definitely catch it on YouTube. I'll be over the mentorship about joining I'm going to contact you via email. Not able to. Cool. ICT is dope. I agree. Cool. Appreciate you, Augustin. Appreciate you guys being here. Okay, cool. So let's dive more into this, and I'm going to give you guys some setups because we're an hour and a half in. Cool. So let's knock this down on a smaller time frame and some more people. We still got 86 though. So cool. Now look at this. This is exactly what you want to see as we go down into a smaller time frame. Look how beautiful this 15-minute candle is. Like, that is the exact evidence that you want to see, right? It was one candle down. A lot of times they're going to do it in one quick sweep. They're going to take out all of these early buyers. Now, again, I say early buyers, but, technically some of them, may have made money on the way up, whatever it may be. But in one swoop, they drop all these buyers out, right? We got a 78 pip candle, 78 point candle on gold. And then what do? They reach down below liquidity, trade back up. So as we look at this now on a 15-minute time frame, right? The open in the 50% is pretty much the same as it was on the hour chart, right? Pretty much the same. You can see that they even pulled back to that hour 50% here on a smaller time frame. But what do we also notice? Now we have a new area of imbalance to look at. So I'm going to delete this hour 50% that we took there. And now if you want something, less than a 60 pip stop, you would wait for them to possibly come trade into this little bit of imbalance here, right? Now, now this is a big candle. So again, you may not get, and especially on gold, you're not going to get a 10 pip stop, 20 pip stop. When I'm entering golds, I should have said this earlier, right? If I'm entering gold, it's always a 40 plus pip stop. There's very rare opportunities, unless you're trading on a minute time frame, that you can have something under a 40 pip stop on gold. So this is normal, right? This is normal. This is just how gold moves, high pips, again, especially when it comes to, everything that's going on now, you're just going to have to, risk this if you're entering gold on stuff like this. But again, maybe wait for this imbalance to get traded into. If you were to do that, we'll just pull back a little bit. And, again, that could be your least risk setup there. And let's just go ahead and kind of look at what we want to do. And, also, you might run the risk of it, stopping you out, but you don't have to go all the way to the bottom of this wick candle. Maybe you choose kind of another wick in here, maybe on a smaller time frame. Let me delete this little blue box. Adding some more people in as they join, right? Let me delete this, right? You see kind of like this last down wick, maybe you throw a stop up under here. Again, you pretty much get to choose what you want to do. But again, most people are going to have it up under there. And, again, as you knock down the smaller time frames, you're not always going to reach for that highest area for profits, right? Boom, here. If you were to put a stop up underneath that wick, right now you're risking that 30 to 40 pips. Where's your 3 to 1? Right now your 3 to 1 is right here, right? Not all the way up here. So again, like it just gets more fractal as you move into smaller time frames. I'm just going to do this real quick and then we're going to go lightning speed. Cool. So again, everything was pretty clean here, right? We had the nice drop down and we kind of just trickled back up. As you can see, look at this nice buy to sell to buy action. So these are kind of open right here. So I really love kind of this imbalance here at 1862. And, again, maybe this last down candle is where you want to throw the wick. Again, and just know, like, if you're taking this on smaller time frames, you gotta, if it stops you out here, either you enter again with the bigger stop or you just let it be. You just were too early on this pair. Maybe you didn't enter at the right time, this, that, and the other. So that's really what I'd be looking at for gold. This will be on YouTube. Yes, exactly. At least 40, 50 point stop loss. Yeah, David. Again, especially for people that have studied the charts for a while, it's hard to get under a 40 pip stop for gold. I took an 8 pip stop on a 1 minute time frame entering gold. Again, that works on a 1 minute time frame. How do you find the imbalance? We got videos on that. Yep, go watch his videos. Appreciate you, David. Will this be on YouTube? Yes. Sometimes I like to trade towards the FU candle while waiting for price to get there. You could turn off the waiting room settings. It's weird. Zoom just did it to where like you have to either have a meeting password, a waiting room, or something else. And I clicked on for it to do the password for this one where it's just a one-click thing, but it didn't work. So it's all good. I haven't had an issue with admitting people into it. Is it better to put your stop loss 2 to 3 pips lower than the wick in order to protect yourself when banks want to create equal low, equal top? So that's an awesome question, Nicola. They are going to do that sometimes, right? And again, this is where it comes into not every Wyckoff accumulation distribution is going to be perfect. Sometimes they have to go make that equal low, equal high. So, hey, if you want to do a couple pips below the wick and that works for you, perfect. For some people, they like to be really precise and they like to kind of do it right there. But I would say that that is something that a lot of people put into play, is kind of doing 2 to 3 pips lower than what that actual low is, in case they want to equal out the markets. Cool. Okay. I'm going to hold off on the questions. I'm going to run through some charts. Yep. We're going to do it right now. I'm going to show you guys all the examples that we got for all these other charts. And actually, I know I say a lot of things and then go back to it, but I do want to show you guys how you would properly find your targets on this, right? So again, I'm going to go back to the hour for this. So again, it makes sense, right? Where would our targets be if we're entering somewhere down in here? We got a lot going on here, right? If we're entering some down in here, what would you want to seek? You want to seek areas of equal highs, equal lows, M's, W's, consolidation, money pools, liquidity, whatever you want to say. Boom, what lies above liquidity, imbalance, boom, what lies above imbalance. We got this last up candle. You could go break down this candle into smaller time frames if you want a more precise exit up in here. But either way, that's what you guys would be looking at. Shows up perfectly. Cool. I'm going to take a break from talking. I do plan on doing webinars every Sunday for you guys. Cool. Let's do it. I'm going to do Forex. Then we're going to touch other stuff. This is going to be the last bit of Forex stuff that I do. I'm going to go over all these pairs. We already did GA and GJ. And I'm going to do all these. I'm going to do all these on the hour. We're not going to do higher time frame stuff. I want to show you guys, personal setups that I would look for this week on these pairs, and just leave it at that so you guys can come, kind of review this stuff. Appreciate y'all. Cool. All right. Euro USD. Now, again, I don't really trade these, and there's multiple reasons to it. I mean, as you guys can see here, I don't really see an amazing opportunity like I saw with the pound dollar, right? Like I saw with USD CAD, right? But Euro is a very major pair. It's a slower moving pair. Already did GA, so if you missed it, you're gonna have to go ahead and watch the recording, my brother. But again, this is why I'm recording it, so you guys have it all. Now, I'm gonna stop talking. EU, looking for our major things. Higher time frame bias, right? What are we doing now? Bearish dollar, bullish EU. Perfect. So we're bullish on the pair. Market structure, bullish, trend, bullish. So what do we want to be look for? Possible bullish re-entries. Now, as I look left to get right, and I know these candles are a little small, but we got to do it, right? We start looking left, no imbalance, no imbalance. This is pretty much all liquidity, all liquidity. You know, again, more wicks, more wicks, more wicks. The first thing that catches my eye for a possible hour opportunity to enter would be this right here, right? This little gap in price where we had this week, you know, start off here. We gapped up. All we did was trade back into the open of that down candle. So, you know, again, there may be some more prices hanging out down here. Price is currently at 21.80. This is down at 21.20. So again, for EU, it's 60 pips, you know, 60 pips away, you know, 60 to 65 pips away. So first thing that catches my eye here, we can obviously see that they built up, right? Even some more nice liquidity above that imbalance to the bottom, right? And then again, you could be looking at this candle for any possible entry areas, right? So as I move that to the back, what would we do? We would put a stop up underneath the low, admit, right? So 2104, right? Maybe if you want to do like 2102, right? It's near that whole level as well. So if they wanted to push a little bit lower, they do whatever they want to do. So this is what I see to the downside. And other than this, right, everything else is kind of be traded into. And there's really nothing else more to the left here until we get into all of this imbalance over here. So again, unless this absolutely opens up bearish because of Brexit, this would be the price that I'm looking for to take the market higher, right? So again, let me just go ahead and set these up, right? If we're entering, you know, maybe around the 50% of this last down candle, right? We would have about a 12 pip stop. And as I look to the upside right now, there's no, you know, no price action is showing imbalance here, imbalance here. Now here's our first area, right? So we got imbalance there. We obviously see the evidence that they took, right? Liquidity here, they purged it with this up move, fast down. So this is what we would want to be looking at. And again, like this is where we can give, I can, you know, you guys can literally wait for either the buy setup or the sell setup. Because again, the market doesn't have to come down here this week, right? It could not give this buy position this week. It could just trade up into this up candle, right? With a stop up above the high. So maybe a 25 pip stop. Let's just say you enter, let's just say we enter at the open of that candle. I'm not going to go into smaller time frames, right? So open of that candle. What do you want to look for? At least a 3 to 1, right? A 3 to 1. And again, they're going to give us kind of some more price action to work with. But as you see, that 3 to 1 would pretty much be equaling out this liquidity. And again, you could even run this all the way down here. Now, it's like if we, and this is the only time I'm going to do this, right? We could hang out here. You know, maybe we show the evidence of a big bullish candle, then we drop off really fast, right? All the way down here. And then we hang out and then do this, right? You might want, you know, we're going to properly, you know, scale here. And if this is where that bigger imbalance is, then this is where I would look to get out of most of the position. It doesn't have to come all the way up here. But these are the two areas that I'd be looking at for EU this week, right? The price of 22.25, right? Or the price of, and let me just get a blue line. right? 21.15-ish. So boom, that's what I'd be looking at for EU this week. UJ on the hour. Now, again, I'll just do the daily super quick, right? What do we have? We have obviously downtrending market, bearish dollar, makes sense. So overall market structure, right, is bearish, trend is bearish. I'm going to skip over the 4 hour. Now as we go into the hour, I'm going to do the same exact thing, right? So we're bearish. Let's see where we could possibly get into any bearish re-entries as we start looking left above this wick. Now, again, this is pretty clean from last week, right? We pretty much had this liquidity that was sitting here, right? Liquidity here. What did we do? We purged that liquidity that also traded into the last up candle here, right? So up candle, right? Liquidity. We purged it here last week at about 10 a.m. before market closed for Christmas. So really, I wouldn't really be looking for a sell entry here. This didn't quite tag the 50% of this candle. So maybe on a smaller time frame, we got close enough. Maybe there's something hanging out here. I see 103.78. So again, this quarter level entry, maybe could have been it last week off of this candle here. But other than that, I would probably wait for them to raid. This overall, money here, because what do we have above this? We got a little bit of imbalance hanging out over here, right? And I'm just going to kind of make it big there, right? Imbalance. We have a little bit of evidence, even though this is pretty equal, and not too crazy. And now as I even look more left, right, this is pretty much equal money here. So I almost don't even kind of like these sell setups here. Yeah, there could be a potential, institutional, mitigation play here, but I still see more money sitting up here with this imbalance. So again, like if this first one doesn't pan out, or it hits it at the wrong time, or you're not seeing that evidence of redistribution, then just don't really enter on it. And so this is what I'd be looking for. Let's see what our prices are at. So if we were to look here, we could see that the whole price of 104, it's kind of hanging out there, right? I would throw a stop up here, make that red, 104.12, right? We'll do maybe 102.14, 102.15, whatever you want to do, right? So again, 14 pip stop. What do you want to go ahead and target, right? We need to see what our 3-to-1 would be. Here's our 3-to-1. Right, 3-to-1 is going to start breaking into this price action here. Other than that, right, I just kind of see a big trend line of money here. There's not really any major imbalances. We've already traded back into it until we get down here. So if there were to be a buy position that we would look at, I would wait for this imbalance to be reached. I would wait for this candle to be reached, and we would go ahead and see, what kind of opportunities it gives this on a reaccumulation area, right? This was really clean. Where they sell candle, right? We played off of it very nicely. We didn't really come back to mitigate this on the hour. So either I'd wait for this sell set up here, right? Or, if we end up getting, just major bearish dollar to start the week, maybe we come down here first and we take something like this, right? Stops up underneath this right here. And we would target whatever imbalances that were left here. Again, a 3-to-1 would only be about right here. So buy prices maybe around 103.15. I know it's not a quarter level. You can kind of make whatever you want, right? Stops. As you see, it's near that 103 level there. Maybe a little bit higher, whatever you kind of want to use that. And then targeting anything to the upside. And again, it's not always going to be perfect. If you take an L here on this stop, maybe the dollar's just too bullish. You just wait for that next area to be touched. So that's what I would look at here. And you guys, may notice that like my setups, I'm not giving you a setup for when the market opens and to take a setup at 7 p.m., right? No, market's consolidating right now. I'm not looking to take anything inside of this. I need to wait for them to purge out the sellers or purge out all these buyers. Right? I'm not one to give you guys setups. When we talk about mentorship in a little bit, we'll go more into that. So that's what I'd look at for UJ. Another major, AU. I'm not going to do higher time frames, right? Bearish dollar. A lot of these are playing with the bearish dollar. So bullish AUD, as you see. So if we would want to position ourselves into a buy position this week for AU, what would we start looking at? Looking left, looking left, looking left, looking left. Not really an imbalance there. I'm not interested in it. This was really nice, right? This sell to buy action. But we did already get kind of a nice retracement here off the open of that candle. So maybe nothing here. You know, if anything, I would look at this half level here at 50, right? But again, this isn't really, you know, if you were to try to take something there, you know, again, like a little 8 pip stop, if you were to try to run this high, but something even cleaner than this, right? As we start looking left, you see all of this equal price action right here. Again, this is where a lot of buyers were left sitting. Now, what's below this liquidity, right? We have an imbalance of price, and we have this institutional candle, right? So again, all three of our things that we want to see. So, you know, again, for continued buy positions, maybe we see reaccumulation here. And, you know, this is also the thing, like this reaccumulation here, right? If we were to come down and kind of make a little pool and then trade into it, and you caught a buy entry here and you run up over 3 to 1, like don't hold this thing thinking it's going to go forever. It could stop, right? It could do this and just stop after these highs and then go seek this lower imbalance. So again, that's why you always need to properly scale and never let a winning trade turn into a losing trade. But before I enter at 75.50, I would look for this. So let's see what our prices are, right? What's our open at? Blue, 74.98. So again, notice how I'm always looking to round these numbers to the whole level, to the quarter level, to the half level. So, and this is a major half level, right? This is a 500 pip level in between 1.8 thousand and 1.7 thousand. So this is really what I would love to look at here, right? That's more the open. If we were to look at the 50%, right? Maybe at 90, and where would our stops be? Up under the wick, right? Maybe on a smaller time frame, you could find kind of a shorter stop because this is all the way down at 62. You know, so again, let's just pull out our risk to reward, right? What do we want to target? You know, if these highs stay intact. Now, again, I just showed you guys, you know, possible areas to the downside. What would be possible areas to the upside? I don't really see any. I mean, we have equal money here. And, you know, even though, yes, we have this little gap here, I would not be interested in selling AUD, UAD, USD, really, because this isn't really a clean buy to sell off. And this overall is just kind of like money built up here. So I wouldn't really be interested in selling this because I just see a lot of liquidity to the upside. And that's what I would want us to go fill. All right. Very beautiful. As you see, this buy to sell structure, what did we do? We came back and effectively traded into the 50% and stayed above that there, right? So this would have been a beautiful entry, right? Last week, 5 a.m. You know, again, maybe this wasn't, you got to let this, maybe you're not up at 5 a.m., right? Maybe the proper retracement entry came in here at 8, 9 o'clock, and that's what you take higher. So other than that, you know, obviously, if price were to blow through these, we would go ahead and start looking at the next stuff. But this is what I look at for AUD USD. You know, maybe on a smaller time frame, something here if it happens to be at the right time. As you can see, right, very clean. If you wait for the imbalance, let me grab this so it gives us the 50%. Man, whoever watches this 2-hour recording has to love to hear me talk. Crazy. Right? So again, look at this, right? 50%. There's not really a clean down candle, right? It's kind of this doji, this whatever doji wick here. So again, this would be riskier, right, of an entry. But either way, you know, you can knock down that stop to 10. And again, just maybe look for 30 pips or so. Again, this could just be a short-term sellers, you know, pulling out of their major, you know, sell positions and then reprice up here. Because again, the market's going to move in waves. It's not just going to sell off rapidly. Maybe to start the week, we come up and we trade into this and we start selling off, and they might make a nice little, down here, right? They equal out money here. They pull back up a little bit. They make another pull down here. They equal the money over here. They pull up a little bit. And then that last wave down pulls down here. And then what are they going to do? They're going to consolidate for a little bit, right? You want to see them make money, and then maybe they purge that money. And then what happens? Maybe they'll make a little, right, Elliott wave retracement back up, right? And again, the market's always moving in waves. So again, this is super hypothetical, but this could happen. Overall, they could just have this shorter term pullback to then go ahead and reach that lower imbalance that we're looking at, on the hour time frame. All right, I don't want to skip over questions that you guys have on these charts. So let me go back real quick, and then I'm going to, again, continue to blow through. Hey, this is my first time on your webinar channel. You're great. Thank you, bro. Appreciate you, Nicola. Me also been watching videos and learning like this. I'm learning even more. What's Brexit? I talked about that at the beginning. It's the Britain exit of the European Union. Just know it is not bread. UK leaves the EU. How would you, thank you guys. Look at these guys already letting them know. How would you be incorporating the fib? I really want to see you use it more. I know you have the good settings too. Yeah, we got to get more into the fibs, probably not on this. Can you show another example of finding liquidity and imbalance? That's what I'm doing now. I'm showing you guys all the examples. Notice a lot before you get an FU candle, there's divergence. So it's taking all divergence, early traders at equal highs or lows. Yeah. So again, divergence is something really cool. And again, I know a lot of my institutional mentors actually use divergence as well. It's something that I'm not, maybe lyrically versed on, too well. So I'm not going to speak a lot about it. But divergence is something you can keep your eye on. Colin, thanks for you talking 2 hours. Don't thank us for being here learning for free for sure. Talk for hours. AUD USD, you can look at the 4-hour chart. I'll pop to the 4-hour chart quick. You foresee price similar to me. Perfect. Hey, Jamie, that's just you, training your eye just as well as I have. I'll be watching and rewatching amazing teaching. The more you talk, the more it gets in my head. Exactly. Again, I may be apologizing here, but, again, you guys are here for the knowledge. Biggest problem is finding an entry. Again, that's everybody's biggest problem, right? That's literally the biggest problem when it comes. We could know the overall bias. And that's the thing, I could show you guys all these biases, but entries are really, really key. And that's why I'm so big on entering at the right times. Because again, it could show you all these different entries, but you really got to wait for the right time. How do you confirm a true break of structure? That's a great question. I don't know. I'm not going to get into that right now, but I'm going to write that down because that is a great video idea. How to confirm true break of structure. Cool. I'll come back to y'all on that. That's a good one. All right. Let me give you guys some more setups. I'm going to go ahead and do NU before I dive into the crosses because this is kind of the last major that we're looking at. 4-hour. Again, bearish dollar, bullish NU. Perfect. And again, the dollar's traded. You guys got to understand, the dollar is, that's why they're called majors, right? The dollar is traded in almost 86% of the transactions. So yes, there's going to be, the New Zealand dollar is going to have some effect on this pair, but it's mostly driven by the US dollar. Looking at the hour, this is kind of the same as you guys can see, right? This looks similar to AU. Why? Because it's dollar driven, right? Look at all this liquidity, right? And then you look at NU, it's literally the same exact picture. So again, that's why I said, when I give you guys the setup on GU, go use that for GA and G and all the others. When I give you a setup on AU, you can go look at that with NU or, whatever else it may be. So again, what would I want to look for? Imbalance, down candle, make that blue. I'm gonna stop talking. Stop up under here. I mean, again, with NU, these are going to be really short stops. 53.49. I know that's a 4-pip stop, whatever. Again, if you wanted to use something a little bit bigger, maybe bring it out down here, maybe bring it above this wick. Again, a smaller time frame, a 15-minute time frame, might give you kind of a better justification on where to put that stop loss. But again, I would want to see them. You see this manipulative wick from last week. right? They effectively traded into that imbalance that lied here. As you see, right, they kind of tagged that 50% before this down candle. I wouldn't really be interested in this candle too much because we have this imbalance lying here. There's actually a couple different little buy setups on this, right? If this one were to not, work out or hit at the wrong time, I would then look at this one, right? So again, entry maybe around the open and stop up underneath whatever wicks you want to use on whatever time frames. And, again, this is going to be cleaner than this because this is a small imbalance with not really an institutional sell to buy on an hour and, really not a whole lot of liquidity hanging out here because it was just one wick here versus this entry, right? Look how much liquidity they had built up. They had built up liquidity from 7 a.m. December 21st to, about 8 p.m. December 22nd. So a full day's worth, day and a half of liquidity got built up here before this imbalance in institutional candles to the downside, right? Where does this line up? At a 20 level, right? Where does stop? Right here at a whole level. So that's what I'd be looking at for NU. Again, not really interested in selling any of these pairs, right? Even if they were to give a nice rejection off of this gap area here, there's really not a whole lot going on. And even this, right? We already saw them mitigate the open of that candle. And overall, this is kind of equal stuff up here. So, I'm just kind of pointing that off as a pool of money. So I'd be interested in, repricing buy positions here on NU, just like we've done with other pairs. EJ. And as you guys see, like, as I go into these other crosses and whatnot, I mean, again, like, it's just ugly to me. Like, I don't want to be, look at this 4 hour. We've literally been in this box of consolidation since the 1st of December. All of December, I'm not going to sit here and wait for EJ. And yes, this is, beautiful distribution right here, right? You got all these highs, right? And you got that up candle, right? But you literally would have had to wait all month to get these entries, right? So again, I just personally am not going to wait for these. Now, again, if I would have looked at this at this time and you just wait for it, perfect, you take that trade. But overall, we have been consolidating, right? So not really looking at this. Obviously, we've been very bullish, but, again, I wouldn't be opposed to this being a high time distribution for us to go ahead and fill in, some of this higher time frame imbalance, right? And what do we see on this higher time frame imbalance? Nice sell to buy structure. So let's see if we can maybe reprice into a sell position this week. So let's dive into here. I'm going to go ahead and delete that overall bigger time frame here. I'm just going to go ahead and delete everything. As we look at the hour, really nothing. As you see, we've already shown rejection off of whatever up to down candle we could have played here. So overall, not really looking for any entries here. As you see, they played around that entry for a while. So that's money right here. This is money. So, hey, if we were to maybe come trade, maybe up into here, we have a little bit of imbalance. We have this up candle, maybe I'd be interested in taking, kind of a sell set up here. So boom, right? Where would I stop be? Maybe up above these wicks. Let's just see what this wick would be at. 93. Nah, we'll go ahead and move it up to this one because this is probably right there at the whole level, right? 127 whole level. Now, again, cool. Like on this sell setup, we would be using 127 as the stop. But think about it. If, people would have been taking, you let all this distribution, you let all this accumulation go on, all this consolidation go on. And then here at 3 a.m., right? Key times, what did they do? They moved up into a major whole level. So maybe people are taking those sell positions off that whole level 127, and you've been in profit since you entered that market. So that's what I would look for any sell setups, right? What are we going to target? We're going to target all of this liquidity hiding out down here to the downside, right? What's below this liquidity? We have this down candle. So, again, you would want to start taking profits anywhere here because the market can show rejection right off of this 50%. So cool. That's what we'd be looking at. And look at this, 125.80. And again, not only are quarter, half, and whole levels great. A lot of people like to use 80 and 20 levels, right? This is literally 100 pips apart, right? 126.80 to 125.80, 20 pip stop to catch 100, 5-to-1 ratio. This is what I'll be looking for. Maybe it doesn't go give this sell setup, right? Even though, you know, we want to be bearish on this, you know, maybe it just comes down and, you know, hangs out here, trades into this down candle, right? If it's at the right time with the proper stop, you know, again, and that's why I believe if I can just help you guys point out these candles, I don't got to be here to help you guys buy now, sell now. There's other people for that, not me. 10 pip stop, run it to the upside. That's EJ. We'll do EA. So we'll just look at the 4-hour quick to see our higher time frame bias. Okay, so bearish, higher time frame bias, right? We can see multiple distributions hanging out here, right? Even last week, right? Up candle, sell off, come down, you know, retest, sell off. What are we, you know, pretty much coming into? We're coming into this equal, you know, pool here. So I see a lot of liquidity to the downside. I see very bearish structure. Move on to the hour. Where could we possibly reposition ourselves into this bearish structure? As we start looking left, you see very small price action, very small price action. You know, maybe we could peep this candle. Now, again, for me, these aren't going to be as clean as maybe some of the other pairs that I go over. But if we were to look at the open, see what price we're talking about, look at that. You know, again, like it literally doesn't happen by accident. Like it's literally a nature of the markets. 60, 75, it's a quarter level. Right, where would you put a stop? You know, again, you could put it up here, but probably above that institutional wick, right? So there, right, 60, 90, 15 pip stop to maybe take this pair lower. You know, again, other than that, I don't really see a whole lot. Again, like the market could hit this at the wrong time, maybe not want to play that. Maybe we play this last up candle, right? So then you look at something here, and then there's really no major imbalances left up to the upside. And there's not even an imbalance here, right? Right, because this wick retraced into that wick. So I wouldn't even like that. There's probably some lower time frame, you know, imbalance here, and that's what I would look at. And we would just take this to the downside, right? There's not always going to be a setup both ways. You don't need to be looking for a setup both ways. Notice how, you know, taking probably even what is the right time, open London or New York, go watch my best times to trade. I mean, that's one of the best videos I think I've made on YouTube. So go watch that, Nicola. Do you use quarters theory to find entries? Yes. Does AUD have correlation with gold? I can't really speak on that. I'm not really sure. Yes, gold is strong. Hey, David knows more. You know, David has some insight other than me. Beautiful. He said yes. Cool. So you can see, look how the 3-to-1 ratio, you know, ends right where the markets ended off last week. So that's something that we would look at. So again, this is what I would look at for EA if you really want to see it. Let me just look at some 15-minute time frame. Cool. So again, you just got to wait for the right time. Right now, as I go down the 15-minute, I don't really like this as much. It's clean on the hour. But again, stop up above this wick. We did get, you know, a retracement back up. We left a little bit of imbalance. So again, you can kind of, you know, if you want to take this 10 pip stop, again, I will take 3 losing. If I get stopped out 10 pips, 10 pips, 10 pips, I lose 30 pips. You know, again, one trade, I could win that all back, right? I'm not perfect. I don't need to be perfect. But maybe the market doesn't come up here. We also see this, and this is what I was just kind of going into. If the market were come to trade into this, you know, again, we have imbalance. I'm not going to point it all out for you guys, right? We're at 58, right? And you had a stop up above this wick, which would be 68, 69, right? Another 10 pip stop. If I happen to enter this and get stopped out for 10 pips here, right? I'll take that 10 pip stop, because then if I see it again happen here, I could easily catch that 10 pips back, right? So that's what I would look at for EA. That's kind of the 2 things that I'd have my eye on. And other than that, I would look to attack this low over here. And then there's nothing really in this low that I look at. See how there's no imbalances. Everything's been retraced back into. So overall, this is a pool of money. So AJ, we obviously see bullish structure, right? Bullish structure on a higher time frame. Go down to the hour. All right, what do we want to look at? You know, anything to reposition ourselves into a buy position. I see imbalance here, liquidity hanging above it, you know, little nice institutional candle here. So again, entries maybe around 78.42, stops up underneath the wick, right? Nice 10 pip stop, right? That actually mitigated that. So really beautiful. Other than this, you know, buy entry to kind of take it above all these highs here. I really wouldn't be looking for anything else. Everything else has already been retraced back into. So, you know, even this setup, right? This is even just a 2-to-1 setup. Hopefully it would run a little bit higher. But that's something that I would look at here, or a 4-to-1 setup might be 82 to 42. Yeah. So that'd be something I look at for AJ. And again, this is like, even if you guys aren't asking for these pairs, I'm doing the same thing on every single chart. That's what I want to show you guys. I'm doing the same thing on every single chart. So kind of consolidating, we've had, you know, kind of some bullish structure to play off of. So right now I would say we're pretty bullish on this pair. As you go down to the hour, you know, where would possible bullish areas to get back in be? As we look left, don't really see anything in here. Don't really see anything in here. This is what first catches my eye. Right, boom, we have this last down candle. So again, maybe entry here around 80, 85, right? Stop up underneath this, which would be 65, right? So a 50 pip stop. You know, EuroCAD's a little bit bigger as a cross pair. You know, again, even still, you know, if that doesn't happen at the right time, there's still a little bit of imbalance hanging out here. So, and this is even 150 pips away. So I don't really like anything on EuroCAD, and even to the downside, I really wouldn't be looking at this week. I mean, we have some imbalance hanging out up here, but this is far away. I don't really see any major entries happening. We're over 100 pips away both ways. But again, this is what my eye is drawn to. This last up candle and this last down candle. Cool, 3 more, and then we're gonna 3 more Forex pairs, and then we're out of Forex. Sheesh. And again, like, this is what my mentorship consists at the moment. You know what I mean? Like, you know, again, for the people here that have been, you know, hanging out for a while, and the people that are going to watch this recording all the way through, you know, this is what I'm doing. I'm personally just, like, again, taking a little break away from the daily stuff. I've been so caught up on it. Like I answered earlier, you know, there's a couple other, you know, entrepreneurship things that I'm working on at the moment, trying to figure out what my best route is to give you guys, you know, value. So it's like, I may not have a straight up basics course, but if you sit down and watch this 2 to 3 hour webinar, I mean, this is my mentorship for this week for the most part, along with what I put in the Telegram chat. Because I get so many questions about my mentorship. And even though I've answered it in other videos, I still get, and again, like, I shouldn't be, you know, complaining about it. And I'm not by any means. But I'm just saying, like, I'm just kind of just taking a small break from it right now, especially with the holidays and whatnot. Bullish price action on ACAD. Go down to the hour. Again, to the sell, to, you know, to the upside, there's nothing that I would want to look at to sell this pair. I mean, we're very bullish. I just need to look left. Wow. When was the last time price was this high? Right. So you can see, like, I mean, this would probably be, you know, the next area at 98.52, which is exactly 100 pips away from where we're at. So I would not be interested in selling this by any means. See if there's any possible rebuy entries in here to maybe, you know, pull up to this 98.25 level, or, you know, 98 whole level. You know, 98's even better. It's kind of that major whole level there. I don't really see much, right? This pulled down into here, little equal. I don't really see a lot. I mean, there's a little bit going on here with a little bit of imbalance here, but I don't really see a whole lot going on for a CAD. Price action just really clean. And again, sometimes, you know, charts just aren't gonna, you know, have a setup, right? We just have a lot of liquidity hanging out to the upside. They could not pull back at all and just move up, or they could find an area that they want to come reprice into and do their thing there. But other than that, I'm not really looking for anything, right? If you wanted to go into smaller time frames, there's nothing. I'm not really liking it. We're bullish. I'm not really seeing anything there. CAD-J. So, again, pretty bullish on this pair on a higher time frame. Go down into the hour. What could we be looking for? As I look left, nothing really, right? Everything's kind of been retraced back into last week. No major imbalances. Prices are pretty equal, right? I don't like that they left, this equalness down here, right? So that's pretty much just money. So kind of the same thing here. I wouldn't really be looking at anything, maybe when we reach this imbalance, maybe a possible sell opportunity. Again, that you could look at here, stop up above the wick, 19 pip stop, target whatever you need to, maybe we target this down here for a nice 5-to-1 ratio. But other than that, I don't really see a nice area where we could reprice into the buy side. And again, this is what I need you guys to do too. Like, if you don't see it, then don't take it. Like, there's no clean imbalances, even on the 15-minute, right? This sell structure, right? All of this consolidation, all of this money that sold off here, they've already effectively, right, mitigated anything that they need to here. So nothing on CAD-J. And this is also why I don't really mess with a lot of cross pairs, because again, they're just not as clean as the majors that I focus on. Euro NZD 4 hour, pretty bearish, pretty consolidating hour. So very manipulative candle to end off last week there. This is interesting, right? We did get a nice sweep of liquidity here with this last down candle. Now, again, we did retest the wick of this open candle and trade up. And then again, this wick already came down into this. So maybe on a smaller time frame, we got something hanging out here that we could maybe take to a higher price, because we do have some major imbalance hanging out up here above this liquidity trend line, right? But overall, I wouldn't really be looking for anything. Maybe a buy setup in here, stop up underneath 15, targeting 50%, whatever it be. Look at this again, like just a little nugget for you guys. Look how the 50% of this imbalance lines up with this old area right here. So see how it's kind of like, again, where they found support, they sold off. Because again, the reason we use the 50% is it's the median price of all the brokers that people are using. So this is just the average of what they want to do. So it's pretty crazy, right? And even as we even look more back, look at this price of, and I'm going to pull out a major line to show you guys this. We still got people hopping in the waiting room. They're like, oh my gosh, this webinar is still going on 2.5 hours. Welcome anybody that's new. But I wanted to just point this out real quick because this is what my eye just saw, right? If we look at this 50%, what quarter level do we have here? 72.50, right? It's literally 72.50 is actually, and I may confuse you guys here, it's a major quarter level. So a major, when we talk major, we're talking 1,000 pip levels. So it's like 7,000 is a major hold level. 7,250 is a major quarter level. 7,500 is a major half level. These are, the 250 pip levels and the 1,000 pip levels, right? So look how relevant this price is. Boom, right? Rejection, right? Makes sense as to, why they made kind of the 50% of this imbalance of price right here. So I'd be looking at that. Just kind of wanted to show you guys that real quick. Just to see, if this buy setup would be something that we would actually want to take advantage of. Just going to come back test. And this is back testing, guys. This is exactly what you want to do. Cool. So now I maybe see two different little entries that you could take, right? If they effectively purge this little bit of imbalance here, maybe they come trade into this down candle. Now, again, this is your riskier entry, right? If you were to take something here, right? It's going to be riskier to enter here with a stop here, right? Even though it's a 70.95, right, to 70, 85, even though it's only a 10 pip stop, right? As you kind of look left, right, there's another little imbalance here. So again, this could have just been like a small liquidity buildup to go here. Maybe you wouldn't wait for something a little bit deeper. But overall, again, on the hour, it wasn't really clean. On the 15-minute, it gives you kind of two other little setup areas. So again, maybe you take an L on the first entry, whatever may be, it's going to happen. Maybe something wasn't quite right. And then you would look at the next one, right? And this is at another quarter level, right? 70.75. So, again, just playing off your levels. And hey, again, check this out, right? Why enter at 70.95 when you could wait 20 more pips and enter at a quarter level? Cool. I'm done with Forex. Hope that helps. Let's see. So I will go over Bitcoin. I'm here from the beginning, my man. Got to go. We'll buy, catch the rest on the recording. Have a great new year. We'll look forward to future videos. Peace out. Appreciate you, Jamie. Yeah, shout out to you guys that have been here pretty much the whole time. Much appreciated. Golden nuggets. These webinars are great to go back to and reference. I agree. Thanks for the knowledge, bro. What you do to not babysitting a trade, bro? Will it work if I execute at 1 hour and won't look at lower time frame? I want to reduce screen time. So yeah, reducing screen time is a huge thing, and it's all just about being confident in your trade. And I know that sounds easier than it is, but just know, like, if you enter a trade, like, it shouldn't matter whether it hits stop loss or hitting take profits. Once you're in, perfect. Whether I win or whether I lose, I'm going to learn from this exact setup, and I'm going to go from there. Recording lot sizes, reducing lot sizes help with this. Yes, absolutely. So again, like, cool. So thank you, Levi. That's a beautiful answer, right? If you are having trouble with screen time, 99% of the time, it's because you're over leveraged. You're scared to lose that money. Your account isn't willing to hold that amount of money that you're risking. So what Levi just said, reducing your lot size could really help you into not babysitting your trades. Thank you, bro. Cool. So let's touch on Bitcoin. Jeez, I never even get into indices. This is ridiculous. Again, on a day trading aspect, for Bitcoin, again, I don't have a lot for you guys. You don't want to be, really trying to position yourself in an all-time high when it comes to, retail levels. Like, it was cool to play retail between 5K and 20K, right? Because 20K was that all-time high that we literally breached, come the beginning of December. But now, again, same institutional order flow. Why would we want to buy this market all the way up here when we're in territory that's never been traded into? I just deleted all my old prices, but it's good. Why would we want to trade into all-time high territory when we could wait for certain pullbacks into, this imbalance that was left, right? Down candle, right? This is where old, resistance structure was, right? What's under this, more imbalance and more, old resistance structure. So these would be the two areas that I'm looking at. If you're looking to buy long-term, you know what I mean? I'm not going to say that, 2,600, again, because for 2, 3, 4 years down the road, we see it being a lot further than $25,000. But, again, if you were to position yourself long-term, 24,000 could be a great area. 20,000 could be a great area. I'm even, I'm hoping that, again, we could even maybe pull back into this 18K range down here with this last down to up candle that kind of started it all. So on a retail level, I'm not really trading, BTC on the moment. I mean, very volatile. When you're taking trades on BTC, you're having, at least 100, 200, 300 pip stops. And if you don't realize the pips on that, then you don't need to be trading it. You should just be demoing it. But overall, again, we're super bullish on this. Don't be trying to retail buy this up here because it obviously has major areas that it could come back and retrace into. So that's really all I'm going to talk about with BTC. I showed the two bigger imbalance areas that you could be looking at. Now with Ripple, I have a little bit of different thing. I was pretty much waiting for this to come back down and trade into the price of 30 cents, which is beautiful. Again, I believe that they pretty much dropped this lawsuit news like they've done with other assets in the past, so the banks could get in at cheaper prices. So what happened on this daily candle, right? They literally swept all of these lows, right? Literally pretty much everything from July to November that they made here, they pretty much swept all those lows. So some institutions got back in at 21 cents, 22 cents, 23 cents, whatever it may be. So again, for XRP, it's more of a long-term hold. I haven't looked what happened to XRP. They just had, I had the thing up earlier. You can check the recording. I touched on it a little bit. But again, just news is the excuse. Government stuff, fundamentals is just kind of funny. When it comes to crypto, the big ballers aren't in it right now. So what they got to do is lower prices, let the government and the other companies get in at smaller time, or smaller prices for them to go ahead and run it back up. Bro, I'm telling you that will drive you mad at some point watching every take. Yeah, every take, it really is crazy. Would it be okay to look at AUD USD? I already kind of looked at it. He was talking about it at the beginning. Yes, cool, perfect. And I know it's going to be long, but I will timestamp it just like last time, so you guys can kind of go into kind of where I was doing it. All right. So I will touch on indices, and I shouldn't do it in this video. What if, what we'll do? I'm gonna let indices open up to start the week, and let's do an indice video tomorrow, because if I start doing indices now, I'll give you guys a quick little overview now for the people that have stayed here. Thank you guys for that. We'll go over it now, but what I will do is I'll do another Zoom tomorrow that'll just be over the indices and indexes. So I could have a shorter video to post up on YouTube, and not just throw the indices on the back end of a 2.5 hour webinar that we've been doing here. But I'll touch on them real quick. So again, and guys, as you guys can see, I went through all these other Forex pairs, but this is my main focus. Forex is GU, UCAD. I like to stick with the majors. I love the pounds. I've been doing a lot of studies on the indices, especially this year. We touched on gold, and we're going to start with the S&P, right? We have the S&P 500, which is the main 500 companies, here in the US that are traded on the stock exchange. The Dow Jones is the top 30, and then the NASDAQ 100 is tech companies. So, a lot of the time, lately, the NAS has been running the board because tech has been huge over the last couple of years. So the NAS was actually setting the pace for everything for most of the year. It kind of moved a little bit sooner than everything else when it came to a daily chart. Let me just pull back here. Right, so obviously back in March, we were down at like 6,800, and we traded all the way up, pretty much 100% up here to 12,000, right? So that was kind of the leader. The Dow Jones is kind of there as well. These are the, kind of main 30 companies. But the thing about the S&P is that, this is actually the thing that gives the best returns over time, right? 8 to 12% every year. So this is what most of people like when people talk about investing into index funds. It's normally an S&P index, the S&P 500 index. So when we come to the daily, right, again, very bullish, not really looking for a crash on these yet. As you guys can see, last week kind of gave us a nice, kind of down retracement wick. And, overall, there's no institutional buy to sell candles that we would be looking at to short this market. So, overall, right, this is just kind of money. So, and again, like I said, if this gives an 8 to 12% return every year, the higher time frame analysis is bullish. So if you're sitting here trying to, short these index markets, it's just not really the thing you want to be looking to do. Yeah, on a day trading level, it may work sometimes, but overall, these are bullish markets, and you don't really want to be looking at that. So you just kind of want to look for, areas where you could reposition yourself into buy positions. So as we look here, just look at the really clean order flow, right? Down candle, pretty much retest the 50%, right? Down candle, buy move, imbalance. What do? We pretty much come back and retest the open of it, right? down candle, buy move, we come trade through the 50%, right? No imbalances left, no imbalances left. What do they need to do before they reach above this higher price here while they're in this consolidation area, right? They got to run the lows right here on this daily candle. So again, they drop this candle through the liquidity, they trade back up. As I delete that so you can kind of see it better, they traded into the open of that candle. I know that wasn't straight. They trade up, trade up, trade up, right? And again, same thing as they continue to print candles, right? Sell candles, buy action. What do? Retrace back into the open over and over and over again. Now, again, this candle, again, at some point, they got to come take out, all these older, buying positions. So what were they able to do? On the 21st, again, before the end of the year, we had a very fast sell-off. Now, this is actually when they had accepted this, when the stimulus bill got passed before Trump kind of talked about it a little bit more, right? What does that mean? Oh my gosh, we're about to print money. Boom, we drop the markets very, very rapidly. So that's what this was. As you can see, they created a very nice, what we would call an institutional move to the downside. Send that to the back, right? What did they do on this institutional candle? They came back and traded into the 50%, right? For multiple buy positions last week. So again, very, very beautiful. And again, that's a reason why you use the body and not the whole look at the candle, even though, watch this, I bet this 4 hour is pretty much perfect with the 50% of this entirety of the candle, right? Just below it, right? Traded just below it. But either way, boom, you guys can see the beautiful price action structure, right? What do? This is that mitigation candle here. So again, what have they done? They've mitigated this candle here. And again, just staircasing its way up. And there's nothing, there's nothing telling you that you need to sell this market by any means. Now, as I go down in the hour chart and I kind of delete all this, there are, there are short-term sell setups. You can see this buy to sell structure here. We left imbalance, we left liquidity. What happened when we come trading into, the open of this candle, right? We sold off very nicely. So again, always working both ways. Just don't get too caught up in all these ways. I'm just showing you guys examples in how you can look, at the markets. But let's go into an hour time frame and talk about this week. For everybody still here, and we're gonna end this in about 8 minutes. I know we won't. I mean, we've been pretty much doing a Q&A throughout the whole thing, so we won't really worry about that. And I'll touch on mentorship quick. Our chart. So as I look to the downside to see if there's any area that we would want to reprice into, we're going to stick, I'm not going to look for any prices to the left of this at the moment. As you can see, this down candle, right? What happens? We show the institutional sell-off. We saw evidence of them trade back above, right? So like the question earlier was like break of structure, right? This shows that break of structure from that sell candle. What happens when they show that break of structure? They pull back down, and this looks like they tagged, just below the 50%, right? They attack, and even in here, they tagged a little bit lower than the 50%, deeper retracement of that candle, and then traded higher. So again, traded higher, we accumulated up here, drop back down. What happens again, over and over again? They're going to show evidence, right? Liquidity. This was the mitigation candle for this one. They build up more liquidity here. And then what do? The same exact thing. They drop a candle in here, right? Almost tagging the 50%, not quite. This was more of an open entry here, right? What do? They trade above the highs. That's the exact market structure you want to see. And again, you could be taking these buy entries, and then, you need to be scaling as they reach other areas of imbalance, other areas of profit taking. So as you can see, a lot of profit taking happens here in this old buy candle, again, mitigation, whatever you want to be, and they've pulled back down. So again, just showing you guys the beautiful buy structure. If we want to look for a buy this week, first thing that catches my eye as we look through all of this, we have a little bit of imbalance hanging out here, right? And on smaller time frames, we'll kind of go over to, what's kind of the best one, because not only do we have that, but we also have this, right? And then, also if we were to dive under this, there could be some smaller time frame stuff still up in this candle too. So again, for this is all I could really do on the hour. And again, what are we looking for? We're looking to take, pretty much this all-time high here. So that's what we're pretty much would be looking to take. Now, that's really what I would do on the hour. We can go peep the 15-minute and see what kind of quarter levels match up, and see what kind of times that we could be looking to get into this. So, this little, entry here, if you got little Colton, like what about, this down candle here? Why aren't you looking at this down candle here to possibly retrace into here? Well, yes, this down push moved all this liquidity, but it pretty much left kind of equal stuff over here with this wick here. And we've already, mitigated this now twice. So I really wouldn't be looking to enter, any buys here at like 36.90 area. I would much rather wait for, maybe a deeper retracement of something here in the 15-minute. Now, as we go search here, right, what do we see? We see again, nice evidence of a down candle. See again, nice evidence of institutional imbalance with sell structure. So let's see what these prices come out to. So if we were to do the open of this, right around 36.80, right? Talk about, 80 levels. Boom. It kind of matches up with the 50%, right? You would want to use kind of a stop up under here. Now, again, this is more of an aggressive entry because what do you kind of see here? Kind of some equal liquidity if they were to want to pull through this, and this is a 2 to 3 point stop, right? This is like super small time frame stuff. I would rather them pull down, not into the 80 level, but what lies right here, 75, a quarter level, right? So right here at the wicks, so boom, 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 you kind of look for something like that, maybe stop up under here at 68. So again, even this is just a little 7-point stop. And this is what I would kind of be looking at, this week. If I can get these prices enter at the right time during New York, again, I would love to, maybe take a trade from 75, run a stop, even up under this wick would be a 10-point stop, running it above the highs, right? We're talking over a 3-to-1 ratio for 35 points here. But again, since the market is bullish, we could just continue to trade up. And now since I just did all this on the S&P, again, and I said everything pretty much correlates the same, we should see similar structure on the Dow and on the S&P or on the NASDAQ. So now as we go to the Dow, right, again, same beautiful structure, right, the nice sell hanging out. And now as we look at any areas of possible rebuying to happen, right, we have that same lower imbalance, right? And you're going to be risking a lot more on the Dow than you would be on the S&P. The S&P, check this out. So it's like the S&P is a 7-point stop. But if you were to, maybe be looking, and I wouldn't be interested in this here, because as you guys can see, we've pretty much already, kind of almost tagged it, once or twice. So I wouldn't be interested in that. Again, this lines up with that major, price of 3,000 that, had been talked about forever. So again, this could be a great, rebuying opportunity here. If it wanted to dip a little bit lower, we got this imbalance hanging out here. But again, you see like the same similar buy setups. You just wait for price to get into there. And again, you're targeting the equal highs that it has. As you can see, there's no great institutional candles to the left side. They've already been played. Last but not least, NASDAQ. Now, again, NASDAQ's been a little bit different over the last little bit. But as we look here, again, nothing clean to the upside. This is just all money hanging out here. So eventually we're going to pop through that. And the NASDAQ just isn't really clean. You see all these retracement wicks, right? There's literally no imbalance, whether, other than us maybe looking at this candle on a smaller time frame. Whoops. other than looking at this candle on a smaller time frame, that would pretty much be the only thing I would want to look at. Because other than that, again, nothing over here to the left. So if I were to need to find something on here, I would knock this down to a 15-minute. And again, if I don't find anything, I ain't trading the NASDAQ. I honestly, personally don't really trade the NASDAQ. I did a little bit, to start off the summer, but, really not a whole lot going on, right? They've already pulled back into here. Nothing up under here. Now, as we go look into this, right now, you can see some evidence of some imbalance hanging out there. But again, I don't really see any clean candles that I would really want to enter off of. This is kind of equal here. So the NASDAQ really isn't a place for me to really want to be taking any trades or anything. All right. Now that it's been 2 hours and 45 minutes, most people may not even be, what's your YouTube channel? Cool. Appreciate you, Eki, for dropping that. Again, when it comes to mentorship, even though I only got about 46 of you here now, I'm going to have to update, a little video on it. Or if you're watching the recording, hopefully you get this far and dive into this, but again, guys, how do I start this again? Like when I had found out about trading in December 2017 in the classroom, right? The individual that showed me Forex trading, right, was part was part of IML in 2017. And, again, whoever's listening here, you could have whatever opinion you want about IML, IM, network marketing, affiliate marketing, this trader, that trader, whatever it may be. But guys, the reason that I know what I know, all the foundation, all the basics, all the stuff has come from that academy, right? Day one, even though I didn't learn smart money my first 2 years, like I was the person, everybody else that I had started the academy with, and I've pretty much been mentoring since the jump. Because when it comes to that, what I learn, I teach. What I learn, I teach. One of the best ways to learn is to teach. So I literally sit here and learn more as I teach you guys, right? So, I learned everything inside of that academy. And, just recently, again, like this hasn't been the easiest year. I just found myself not really giving the amount of time that I needed to my students. And I've also had a lot of students that have become self-independent traders, and, they really weren't looking for other sources of income and this, that, and the other. So again, they went out and did their own thing. And I kind of got into a point this summer where I really didn't have, a team behind me anymore. I was kind of just doing stuff for myself. And I really just, for the moment, I, really wanted to take some time. Yeah, only positive things, bro. And if you watch my Instagram stories, like some people try to shit on it. And I mean, I'm never going to agree with you guys on any negativity that you put out, because whatever negativity you put out, you're going to get back. And it's just like, I really give them credit to everything that I know up to this point. Yes, I've learned, other things from other channels and whatnot, but that's where I've learned the key to stuff. I just wanted to personally take some time away from being with people on a daily daily mentorship and doing, I was doing Zoom calls every single day. We were dropping charts every single day, this, that, and the other. So I've taken these last 6 months to really take some time for myself to not only, better my mindset, but to better my trading. So again, at this exact time, I don't want to be affiliated with anything, again, like I obviously still have my account with everything else, but I will say this, there is no better smart money course than what is inside of IM. And if you think ICT's mentorship, you can go enroll into that. If you think that's the mentorship for you, and even his mentorship is $150 to $200 a month starting in January. So you either go pay for $200 mentorship from ITC himself, or, when I decide to come back into daily mentorship, which again, I personally cannot put out, and I just want to do what's best for you guys. I could open up a VIP channel right now on Telegram and charge everybody $50 and make a quick 10, 20K if I wanted to and send you guys signals, but that's not what I want to do. That's not what I'm about. That's not going to give you guys the most amount of education. That's not going to give you guys the most amount of mentorship. I'd just be doing that for my own personal reasons. What I would rather do is get myself back into a position where I'm okay with taking on that amount of students, and even today, having 100 students on here, again, I'm only giving you guys 2.5 hours, 3 hours, but I want to get back into a position for myself where I feel confident in what I do on a daily basis to be able to further you guys along. So, again, am I going to be making, a Colton Lives Bullish course? No, because I can't teach it better than the mentors that are inside of IM. And it's been a little sucky that I haven't been learning from them over the last couple of weeks, because I just haven't been tuning in and I've been doing my own thing. But what I can say, and again, like you guys are getting a little sneak peek here, like when I do reopen up, daily mentorship stuff, I mean, you can expect it to be back inside of the academy. And, again, if you live in a different country, and I understand like money's an issue, and it's normally, 235 to 325 to get started in the academy, and then 165 a month after that. And, again, you guys got to understand, like, this information isn't free. I mean, what I do right now on YouTube, I've had certain educators inside of the platform reach out to me and be like, bro, like, what you're showing on YouTube ain't right. Like, you can't do that. Like, this is too much information. It's super valuable. And I get it, but I also believe that the free content game is huge right now. And I really love YouTube, and I love what I can grow on YouTube, because, what they pay finance channels right now is really cool too. Because again, like, guys, I'm not here just to make money off Forex. I'm not here to just, make money on you guys. I'm trying to have multiple streams of revenue. So, again, whether you want to hear it or not, when I do reopen up mentorship and whatnot, it's more than likely going to be inside of the academy, because I know for a fact that's the best mentorship that you guys can get. It's literally, and I'll just show you guys, right now. This is the course. And, again, if you're watching this right now, or you're watching this recording and you're like, Colin, I don't want to wait for your daily mentorship for when you want to do it, because you're doing this, that, and the other, and you want to, get started. And I am right now, I'm leaving money on the table by not really promoting it. I would literally go reach out to, one of my favorite mentors, John Fibonacci. I've posted up his Instagram before. He has a YouTube channel. Just look up John Fibonacci. He's part of Trade House. He's part of this bounce back course. And if you really need to get started right now and you don't want to be personally, kind of with me, you can go reach out to him. I think he's opening back up enrollment in January, whatnot. Maybe I will in January too. I'm sorry that I don't really have a direct answer for you guys on that. But again, there's no way that I'm going to create anything better than what's right here in this boot camp. This literally gives you phase run, introduction to everything, risk management, market structure, Wyckoff, Fibonacci, spread, mitigation, directional bias, levels of learning, risk management too. And again, what I've shared on YouTube in the confirmation checklist, like, comes from this, but as you can see, it's not even close to these 40 to 50 videos that come inside of this course. So what you guys get, and maybe me showing you this right now is going to completely switch my mentality. And I really got to get back into the mentorship stuff, but it's like, not only do you get this full basics course, but they literally do live webinars every single day where I don't have to be the one that you guys learn from. Because again, like, I'm not the millionaire, I'm not the 7-figure trader, and they are, right? They are. And that's why I've been under their wing for 3.5 years. Now, again, I kind of went against the grain a little bit by posting up a little bit on YouTube, but also I wasn't where I wanted to be inside of my mentorship. I was kind of losing the people that, that I've had, kind of along this way and whatnot. And I really, again, just like kind of wanted to do what was best for all of you guys. And, again, they just kind of give it all out at once. So again, if I understand that, money's an issue for some people, and again, if not, that's why I'm going to continue to give out, free information on YouTube, and you can go study other channels. But other than that, I mean, that's where I stand. And I've already told you guys that before, right? Like, I'm not here to create a course, because I know for a fact that there are better educators out there, and it's priced accordingly. Like, you got to understand, like, a lot of people let a $200 to $300 investment keep them from making thousands, tens of thousands in the market. And I don't know how else to relay that to you guys. Like, people want it for free, but what have I done over the last 3 years, right? I've paid 180 to whatever, like 180 a month times 3 years, which is 36 months, right? I've invested over $6,500 in the Forex education. That's not even including the amount of money that was lost the first 2 years. So, again, this is just coming from the heart. This is coming from what I've learned over the last 3 years. Again, I'm not here to talk down on anybody else, or, again, if you don't agree with me, that's perfectly fine. Continue to learn from free. But I've seen so many people win inside of that platform that it's just like, it's what I'm going to go back to. So I appreciate y'all. YouTube is your plug with some extra source. Would have loved if you started again the mentorship, but here there's no option to join the course. Sniper bootcamp. So yeah, again, like the bootcamp is directly correlated to IM. So again, I mean, having this conversation, you guys, just give me a couple days. Let me figure out what's going to go on this week. I think I'm pretty much going to have a big week. And I really kind of want to get back at it. I mean, I love obviously mentoring you guys and stuff, but, just keep updated in the Telegram. I'll let you guys know kind of the steps to, how I'm going to go about this. But again, it's all through affiliate stuff. You know what I mean? You sign up for the academy. You don't have to recruit anybody to make money. You don't have to talk to anybody. You literally pay for education. And, let me show you this. And just to end this off, I got to show you this DM if you didn't see it on my Instagram. Cool. So this kid messages me, right? Hey man, are you in IM Academy? I said, I was for 3 years. I just recently stepped away. Cause again, I just was doing my thing. He said, finally, I hope you know what it is now. And I said, I absolutely disagree. The only is people who didn't apply what the educators taught on a daily basis. I'm sorry you feel that way. They taught me everything I know. And I know people have, bad horror stories or whatever when it comes to the company, and maybe you're in the wrong team or this, that, and the other. But again, that's kind of why I started sharing on YouTube, because I want to create the community of traders that want to learn how to trade. You don't got to talk to nobody. You don't got to tell nobody. It's strictly for education, right? Yes, I hit certain ranks in the company and, pretty good amounts of money over the last couple of years, and it was great. And I love, passive income. That's exactly, what entrepreneurship and business builders should be doing, because we don't need to trade our time for money. That's not the smart way to do it. But again, that's just how I feel. And I personally don't think I could provide anything better than what they can, especially for such a low price limit. So I'm going to run through this last little bit of chat and we're going to end it off here. This is going to be a long YouTube video. Really unmatched. And I've paid for a few courses here and there. And again, and those of you that know how much other Forex courses are, I mean, 235, 265, is nothing. So true, mate. You could easily make 20K. Yeah, it's crazy. I've done the numbers. Think about it. In 5 months, guys. And again, I'm here to be super transparent with you guys. And I've done this a little bit before. I'm not making bread off YouTube right now. I'll show you guys right now. And I'm going to make more videos on this. It's not like I'm making bread off YouTube, but it does help, over the last 90 days, a quick little $400. And again, they're really paying finance channels right now. So it's even over just 365 days, just around 1,500. And again, I didn't even get monetized, so I really started putting out those confirmation checklist videos for you guys in June. So again, it's not about the money here, it's about the content that I can bring you guys for free. You know what I mean? You get free content. All you got to do is watch some ads, and YouTube helps me out a little bit. And it's the same thing, right? I just saw a little bit more opportunity in YouTube revenue at the moment than continuing with the affiliate stuff. But again, with the amount of people that have been hitting me up for courses, I'm literally leaving money on the table if I don't continue to do other things. And this is where I'm going with this. I've had 2,000 plus people go inside of my Telegram chat. And inside of the academy before, I think I maxed out at maybe 120 people on my team at a single time, which is only $1,000, which is only $2,000 a month. Inside of the academy, platinum 2000. So, and I actually, even with the 125 people on my team, I never actually hit P2K. I was still just a P1K, which is $1,000 a month, $250 a week. But again, think about that. At a single time in that early stages of my trading, I was only able to have, about 100 people. And think about this, over the last 5 months, over 2,000 people have entered this Telegram chat. Now, again, is my Telegram chat sending signals? No. And do people leave it and hate it that I don't? Yeah. And that's cool, because that's not what it's there for. I'm not here to give you guys all that stuff. And I promise you, the educators inside the academy, they don't do that for you guys either. We're so big on training your eye. Now, are there live sessions during New York and during London where they call out trains? You betcha. Are there signal services? Is there so much more that you get outside of smart money when you enroll in a course or whatnot? Absolutely. But this is why it's not about the money. If out of these 2,000 people in the Telegram chat, let's say that I charged $50 one time, right? $50, even if I did it per month, but if I charge $50 one time, and let's say 200 people out of the 2,000, right? 10% of people, wanted to do that. That's literally an easy 10 grand for me, like that, in a day or two, right? But personally, I am not going to provide what I know that you guys need for $50 a month. I'm just not. I'm not. So I don't care about that 10 grand. I don't care about the 20, whatever can make, even if 400 people came in. Like, it's not really about the money for me. It's about the impact. And I know that sounds super cliche and you hear other people in the company say that, but that's really the true part in it. And I hope if you're watching this now or watching the recording, you just know that's coming kind of from the deeper part of me, because I've seen nothing but people win. Do a lot of people lose because they quit? Absolutely. But that's with anybody trying to trade, because we're the 1% of people. We're less than the 1% of people, especially when it comes to smart money. But other than that, I'm done ranting. I appreciate you guys. Much appreciated. Much appreciated. Thank you. Info shared as priceless. Exactly. Priceless. Free info for free. Thanks, bro. Thanks a million. Appreciate you. Definitely, guys. All right. It's 5 o'clock. I don't know how long this is going to take to upload to YouTube, so it probably won't get uploaded before midnight, but I am going to let it upload overnight. So hopefully tomorrow morning it'll be here for everybody to kind of rewatch. There will be an outline and timestamp, so you don't have to listen to the whole 3-hour thing and not know what's going on. I'll probably put all of the pairs that we went over, and then tomorrow, let's look forward to an indice call. And I'll let you guys know on the Zoom for that. But cool, let's get it. I appreciate you guys for being here. I'm gonna go ahead and end this. Let's have a great trading week. The market's just opened. I don't know if they're gonna show where GU just opened up at. Not yet. We need to give it a couple more minutes. Nothing crazy yet. Again, this Brexit thing is kind of going on. It's been ongoing for 4 years now, but there's still going to be a lot going on throughout this week, and especially over the next hour. Again, you never want to position yourself between 5 and 6 p.m. in the market. So even though we didn't get a drastic open up here on price, you know, again, who knows where it's at in like 30 minutes or so. But stay true to what I showed on here. Don't rush into anything. Of course, there's money to be made during Asian session, but is that where the institutions are making their money? Probably not. So keep that in mind. Let's get it. Appreciate you guys. I'm going to end this. Love y'all. Appreciate y'all. Final question. Trade House and IM Academy the same? Yes. So Trade House is a sorry, I'm kind of blanking out. Trade House is a group inside of the academy. And there's actually 2 trade houses. There's like the Smart Money Trade House, and then there's another Trade House LLC where they do a lot of binary trading and other types of trading, right? So, you know, again, I got to fix a little bit of things that I had going on because I personally wasn't part, you know, of Trade House themselves. I was part of MMO, Money Moves Only. I don't know if you've come across any of them, but, you know, I almost was kind of the only one inside of my group that was really deep on the institutional level. Me and my students were really the only ones kind of doing institutional. Other people were doing binary and other retail stuff, whether it's harmonics and all this other stuff. So again, I was kind of everywhere my first couple of years. So I really want to come back as like strictly smart money and help you guys focus on all of that. And, you know, again, I just want to be here for you guys, and whether, you know, again, that you're going to be able to invest, you know, 235 to, you know, again, it's 235 to get started, plus this plus bounce back is like an extra $25 a month. So again, it's like 265 to get started for 30 days, and then it knocks down to 180 a month. And I know that's crazy, but you got to think about it, because it's like, if you have that money, right? Obviously, if you're broke and you don't have money, then you either need to seek, you know, free content or go hustle. I do. And again, even over the last 6 months, I'm doing a lot of other side hustles like garage selling, reselling, all this stuff. I'm going to get into that. I'm excited to bring that to the channel. But this is the thing, the $180 that you pay every month, I make that in one trade. You know what I mean? You just pull that money out. Cool. I got next month paid for. So that's the mentality you guys have. Love y'all. Appreciate y'all for being here. I'm going to end this. Let's get it this week. I'll keep you updated with some charts.